Good morning. I hope everyone is happy to start this new day. I'm pleased to welcome today's attendees and speakers who are going to be logging in from diverse European locations. And I'll give just a few more minutes so that everyone can log in. So just bear with me for a moment. I'm going to kick off now so that we actually stay on time. So good morning to all of you. My name is Clara Galvão. I'm your host for this session, and I'm also a senior consultant with Access BIC. So I'm going to tell you a little bit about Access BIC. We're actually based in Ireland, and Access BIC is part of an innovative and Access BIC is part of a network of 170 BICs throughout Europe. These BICs are the European Business Innovation Centers networks called EBN. Access BIC's mission is to empower high-growth entrepreneurs to drive positive impact within Ireland. We do this by identifying innovative entrepreneurs and provide support and essential business expertises. Over the past 35 years, Access BIC has worked with over 1,000 startups, with 85% of those surviving after 5 years. We collaborate to prepare founders for investments and for growth, unlocking opportunities within our extensive network of partners, fellow entrepreneurs, and investors locally and within the extensive EU ecosystem. My personal experience in relation to angel investing is performing due diligence by screening early-stage startups on behalf of private angels and also advising on how investment-ready these companies are, so consequently influencing the angels' investment choices. We have a packed couple of hours with you today, so as we wait for more attendees to log in, I will give you a very brief overview of what we will be covering. But just before that, I'd like to let you know that this session is being recorded. So in a moment in section 1, I'll give you an introduction of the Investor Literacy Program and what's going to be covered during the 3 workshops. In section 2, we will cover the why for this program. And from section 3 onwards, we will introduce you to angel investment, covering the risks and rewards, the level of involvement that angels can have with companies that they invest on, and also give you a broader view of the strategies being used for investment across Europe and beyond. The idea here is that by giving you a micro and more macro view of angel investment, it will help you to answer if becoming an angel investor is really a good fit for you. We also want you to have a flavor of the wider Ukrainian angel ecosystem in section 4. And then in section 5, you will get the opportunity to hear a founder's pitch and actually experience what happens during those events. So stay tuned on for this session, as it will be a very interesting one. Now, don't worry, we will get you a coffee break. So between section 5 and 6, there will be a break of 10 minutes. From section 6 onwards, we will run a panel with several experienced business angels to discuss their approaches and investment strategies. Now, this is a very valuable session as you get to hear accumulated wisdom gathered over years, and it's worth its value in gold, to be honest. In section 7, we invite an experienced angel investor to share his strategies, and this time is through his portfolio investment. Section 8, you will meet the Director of European Business Angel Network, EBAN, and get an overview of the investment world from an EU perspective. We will wrap up the event in the end with some questions and answers and point you to some upcoming events that are happening, including the Demo Day, where you get to hear deep tech Ukrainian startups pitch for investment. So stay tuned. I'm going to kick off with telling you what is the Angel Investor Literacy Program. So this program is designed to increase investment literacy and know-how for current, new, and prospective business angels. At the end of this program, each of you should have a very clear understanding of business angel investing, how a business angel syndicate works, how to manage deal flow and portfolios, what documents would be required, and what the process from pitch to final investment looks like. The Investor Literacy Program is interactive, containing workshops, presentations, panel discussions, keynotes, and startup pitches. And the aim here is to support your angel investor journey from start to exit. This program is delivered in 3 progressive learning blocks, where each workshop session has a focus theme, which is built upon in the consequent session. So today and in subsequent workshops, there will be opportunity for you to hear from experienced angel investors and founders, syndicate members, and hear accounts which bring all these concepts to life. Today's workshop will also give you an overview of what an angel investing is and what to consider before investing in early stage startups. In a month's time, the next workshop will cover all the details of how to invest and operate through an angel syndicate and how you can grow your angel investor network. Workshop 3 focuses on what happens after the pitch. You will learn about negotiating deals, due diligence, and more about portfolio management strategies. This program will also grant you an opportunity to participate in the online startup pitches, which is being run by part of the wider program called Seeds of Bravery, and you're going to hear about this very shortly. For the pitch demo days, there are quite a few startups pitching, so we have split them over a few different dates, and we will share the link to register later on during this workshop. Now, good news here is if you can get past participating of all 3 workshops, which is one every month, you also get to have a certificate for, well, we're going to be distributing an angel investment certificate just to recognize your participation on this event. Well, I'm very pleased now to introduce you to some of my colleagues from Access BIC, who you will meet today and who are also helping to facilitate the investment literacy program. One thing to note about Access BIC is that it has over 2 decades of experience supporting angel investment in Ireland and across Europe. We founded the Angel Network in Ireland almost 20 years ago. This network is known as the Halo Business Angel Network, or HBAN for short, and has grown from 0 to 33 million per year of pure angel investment, and across 13 syndicates. We're also members of the European Business Angel Network, and we're delighted to host the EBAN Congress in our local city of Cork in 2022, bringing over 350 of Europe's most active angel investors to Ireland. So my colleagues that are here today are Larry O'Donoghue, Access BIC CEO, Aidan O'Driscoll, our resident angel investor, and Fionnuala Wall, who's the EU project coordinator and who will now present the next session to give us a brief overview of the why for this program. So welcome, Fionnuala.
Thank you, Clara. Can you move on the slide, please?
Yes.
And you can move on to the next one. Good morning, my name is Fionnuala Wall and I am the marketing manager with Access BIC. I also am the EU projects coordinator and as such I manage Access BIC's partnership within Seeds of Bravery. If you want to go to the next slide, Clara. Seeds of Bravery is a €20 million project funded by the European Union under the European Innovation Council. 12 million of that 20 million will be earmarked to support startups with a focus on deep tech. I'm delighted to say that to date, 59 Ukrainian startups have received €2 million in grant funding under this project. The aim of Seeds of Bravery is to promote Ukrainian projects, to train entrepreneurs, to enter international markets, particularly focusing on Europe, to integrate the Ukrainian startups into the European ecosystem, and most particularly for today, to reignite the investment landscape and network by educating and informing investors and new investors, and also by helping startups to pitch to investors. Next slide. There are 17 partners within the consortium and 2 associated partners. This is truly a pan-European consortium, stretching from Ireland right across Europe, with some international partners like Plug and Play, and also many partners based in the Ukraine. The partners are composed of renowned tech, funding, and business companies. There are 5 different programs under which startups can apply for funding. These are offering different levels of support, from the Business Innovation Services in Programme 1 of 10K grant funding, right up to deep tech incubation and accelerators offering 25K of funding. Each programme targets projects that are key to rebuilding Ukraine and the integration of Ukrainian startups into the EU innovation ecosystem. Next slide. As well as the grants, there are many non-financial supports, similar to what we're running at the moment, the Investor Literacy Programme. These supports are tailored for each startup, depending on their needs, what stage they're at, and what they're looking to do. And these supports include many activities and very innovative programs. They include matchmaking with investors, accelerators. We in Access BIC run market discovery workshops, which look at the startup ecosystem in each of the geographies covered by the Seeds of Bravery. We also run the Market Fast Track programs, which are helping startups build a go-to-market sales and marketing strategy. As we mentioned, there are demo days where the startups can pitch to investors. There's also deep tech incubators and accelerators, and finance booster programs and pitch training programs. So there's many other activities which the startups can engage in during the Seeds of Bravery program. Thank you very much. Lovely to meet you all, and I hope you enjoy participating in the Investor Literacy program.
Thank you so much, Fionnuala, for presenting this. So I'm going to get started here. We appreciate that not all participants are at the same stage in their investment journey. So some of you may already have invested in businesses before at an early stage of their development, and some might not. In any case, this workshop and consequent ones aim to provide tools and support systems to facilitate investments and mitigate risks. And we made sure there is something of benefit for you wherever you are in your investment journey. As we go along through the sessions, please do add any questions that come up on the chat box, and we will try to get to them in the end of the sessions. We may call some of the questions out as we go. However, if we don't get to answer all of the questions today, we will certainly collate them and answer them and revert them back to you. So let's get started. To begin with, we want to unpack. I want to make sure that you have the key takeaways for the session today. We want to unpack the business angel investing world, why one of you would consider becoming a business angel investor. We will look at the risks and benefits of early stage investment, how experienced angels mitigate those risks. We will highlight the responsibilities of an angel investor, the value that they bring to startups, the key roles and expectations, and also reveal some investment strategies practiced by experienced angels, taking into consideration these risks and benefits. Lastly, we will give an introduction to angel networks and syndicates, understanding how these networks function and the benefits of joining them. But just before we get into all of that, I like to start by unpacking some terms that are often used in the angel investing world. One thing you will note when speaking about investment in startups is that there are many terms which get used often and may be very unfamiliar for those just entering the angel investment world. So it definitely got my head spinning when at the start of my own journey. So considering that not all of the participants here today are in the same stage of their investment journey, let's have a look at some of the most used terms. We'll start with an easy one. Some of you may recognize business angel or angel investor. You may not be aware, or may be aware, but the term angel investor actually originated in the Broadway theatrical world. This happened since plays were often financed by wealthy individuals rather than formal lenders, and payments were due only when and if the production was a success. So the more common use of this term now is that an angel investor is an individual who provides capital to early stage startups in exchange for equity. We'll look now at deal flow. Now, deal flow is the pipeline of pre-screened startups that get to pitch to angel investors. And screening, as we spoke about pre-screen here, is the process of evaluating potential startups to determine their viability and their fit with the angel investors and syndicates. Seed money is the initial cash or initial capital used to start a business, often provided by angel investors. And deal lead is an investor who takes on the lead of communicating with the startups on behalf of the syndicate. They often also negotiate the terms of an investment and help to drive due diligence and arrange for the investment. Finally, exit, which is the holy grail of all the effort that's put into this process. Here is where the investors and founders cash out their stake in a startup. It's essentially the accumulation of all the investment journey where they monetize their equity, typically through one of the following means, either through an IPO, which is the initial public offering, An IPO is when a private company offers shares of its stocks to the public for the first time. This process allows a startup to raise capital from public investors and trade its shares on the stock exchange. It could also happen through acquisition. An acquisition occurs when a large company buys a startup, either by purchasing either part of it or all of the target company, allowing investors and founders to sell their shares of ownership or ownership stakes, and often providing them with a significant return. And there's also buyout, and that can often happen, and it's used sometimes interchangeably with acquisition. But its main differentiator is that it involves purchasing a controlling interest, so often 50% or more of the business. And often as a result of that, it may change in leadership or even the ownership structure. And it can be driven by a financial or operational restructuring goal. Last but not least, the term unicorn. Now, here's an interesting background story. The term unicorn in the context of startups was coined by a venture capitalist named Eileen Lee in 2013. It refers to privately held startup companies valued of over 1 billion or more. Lee chose the term unicorn to emphasize the rarity of such successful startups, much like the mythical creature itself, which is famously elusive and hard to find. In her seminal article, Welcome to the Unicorn Club, Learning from Billion-Dollar Startups, published on TechCrunch in November 2013, Lee analyzed US-based tech startups founded in 2000 that had achieved $1 billion valuations. At the time, such companies were exceedingly rare, hence the association with the mythical one-of-a-kind creature. And although the number of unicorns has grown since then, the term still retains its significance, and it marks an important milestone for startups. Some well-known unicorns include Airbnb, Uber, or Stripe. These companies have not only reached the $1 billion mark valuation, but also have redefined their own industries. Right, so for this next section, I actually would like to invite my colleague and CEO of Access BIC, Larry, to present. Welcome, Larry.
Thank you, Clara. Excellent. Good morning, everybody. And you are more than welcome to the session here this morning. So I'm personally very delighted to be here with you all and working on what we believe to be an incredibly important project in Seeds of Bravery. So far, thankfully, we've met some wonderful people on this project and our partners, and we've met some incredible and amazing Ukrainian startups that are working in the most difficult situations, but still developing incredibly innovative and high growth startups. And we very much look forward to getting to know more about them and more about you as the angel community within Ukraine as well, and getting to know you better over the course of today's workshop, but also over the course of this entire investor literacy program. Okay, so back to the job in hand today. We're going to delve a little bit deeper now into what an angel investor actually is and set the scene for that. So as Clara mentioned, angel investors or business angel investors, they typically are high net worth individuals. So people who have made cash from various forms. Often they are founders themselves previously, and they invest that personal wealth, that personal cash into other high growth startups. Typically this investment is, while not at a super early stage, it is at an early stage of development. And it's very often before, any revenues have occurred in the startup, and it's often before venture capital firms would invest. So it is the high risk capital that goes in at an early stage into startups. So just to go a little bit deeper again, what type of investment range are we talking about? We talk typically about not less than 10K. It can at times be less than 10K for sure. And it can go up to anything as high as 250K for some super angels, and even beyond in some cases. Angels who are used to investing through syndicates, they will typically invest between 10 and 50K. I think the average across Europe is around 25K. I know from running the angel networks here in Ireland, that average was slightly higher at about 37K per angel, per investment, so per deal. So the investment mechanics we touched on already. It is typically an exchange of cash for equity, but because a lot of these early stage startups are quite hard to put a valuation on. Investments are often made through what's called a convertible loan note. So this convertible loan note is quite ubiquitous within angel investing at the moment. And simply what that means is it's a loan. So it's a loan that sits on the balance sheet of a startup, and it doesn't turn into equity until there is a trigger event later. And usually that trigger event is a next round of investment. And at that point, the angel investors who have given the loan note, that loan note transfers from a loan on the balance sheet to equity and shares in the company at that point. So in terms of the return on investment, this is high risk investment, and therefore the potential or the expectation is that there is going to be high reward on occasions. So payments, as we said, usually only occur at the exit stage in the investment, and that's usually via a trade sale or via an acquisition. So typically, when an exit occurs, angels are looking to cash in about 5 to 10x. We again, in terms of terminology, 5x to 10x is 5 times or 10 times the return on the original investment that the angel has put in. So that would be a typical expectation. Of course, we hope for a lot higher. And there has been plenty of cases where there have been 20x, 30x, and even 100x investments, but they are the exception rather than the norm. And in terms of liquidity and timeline, this is an illiquid investment, so to speak. Angel investments are typically not passed on, so there isn't usually a secondary market for these shares. And so you've got to expect that these funds are going to be locked in from anywhere to the exit point, basically. So anywhere from 4 years to 7 years would be a very typical journey for an investment. If it's a deep tech investment, you can expect it to be slightly longer. If it's a light tech investment, you might come across an exit slightly quicker than that. But again, outside of 4 to 7 years tends to be the exception rather than the rule. So I guess it might beg the question why many of you in the audience today, if you're not already angel investors or just dipping your toe into angel investing, why would you actually become an angel investor? So we're going to explore this a little bit more in the context of some of the rewards, but also the risks associated with being an angel investor. So obviously, as we've said, there's an upside to angel investing, and that's what we hope everybody experiences. And that upside can be, because again, it's high risk, the returns can be quite high as well. And that is the expectation for angel investing: high risk, high return. By investing in a startup, angels can also expect to invest before the startup really hits its growth stage. So investment happens when a company is typically valued at somewhere between 1 million and a 10 million range. So before that valuation starts to really kick off. And then finally, and obviously, the hope is that angel investment leads to a growth stage within that company. So that investment goes in to fuel the next stage of growth and scaling within the company. And the idea is that that investment then develops a growth stage and attracts other investors to come in alongside the current investors, and hopefully attracts an exit at some point in the future. So thankfully, we have a lot of examples of exits, and these exits do happen. We're going to give an example of 4 different exits here. 3 of them are coming from our own experience here in Ireland. One of them is a Ukrainian startup. So firstly, Decawave. This operated in the semiconductor industry, so it was very much a deep tech play at the time. It was bought in 2020 for what at the time was a record in Ireland for a startup exit of 400 million. So as you can see, this company was started in 2007. The initial capital would have went in pretty early into that company. So it was a relatively long journey for the investors there. So they had to be patient. So 13 years from start to finish, but a good return for the investors at the same time. The second example here is a fitness tech firm called GlowFox. This was a light tech investment opportunity. It started in 2014, and again, quite a meaty exit in 2022 of 200 million. So that's a more typical investment journey. So the initial money may have went in 2015, 2016, so 6 to 8 years for a pretty decent exit for the investors there. And the third example is quite an interesting one, actually. It's a medical device firm called Aventimed. So they were operating in the medical sector. This was particularly interesting because this company was completely angel funded throughout its whole investment journey. So it didn't take on any VC funding, which would be the norm, and it was funded through several rounds of investment solely by the angel investors that funded it in its initial investment. And you'll see in this example, there isn't an exit value actually shown. That's quite normal. So it's not always disclosed for various reasons. But what I can tell you is that the investors that invested at the early stage got between an 8 times to 12 times return on investment, depending on when they come in. And finally, hopefully this is a company that our Ukrainian audience members will know already. It's Budel. It's known as a startup that changed everything in Ukraine. So this company was founded in 2006. It developed technology in the field of image recognition. And in 2012, it was bought by no other than Google. So again, as with Aventimed, the exact price isn't known, but it's believed to be at the high end of a 30 to 45 million range. So again, a good return for the early investors that came in there. But I think Vudel's impact was a lot more than just the exit. This technology has gone on to become part of Google's core technology and Android phones, offering their facial recognition technology. So I could imagine that a lot of us on the call here have actually ended up using Vudel's technology unbeknownst to us at this stage. Okay, so we're going to see during the workshop today, we're going to drop in some of these, what we like to call pro tips from time to time. So our first pro tip here comes from an older but still legendary American investor called Shelby Davies. And his advice, I think, is as applicable decades ago as it is today, and that's it's about patience effectively. So to invest for the long haul, not to get too greedy, but not to get too scared as well. So this is sometimes angel investing is not for the lighthearted, and is definitely you need to be patient along the journey as well. So we want to now look at some of the other rewards that beyond capital effectively that angels can the benefits that angels can bring to the table beyond the cash that they bring, and that is often referred to as smart money. And just to unpack that a little bit, but also I think it's worth looking at some of the things that angel investors often speak about getting back from their investments and from being part of the journey with these startups beyond the exit cash that they get from the company. So firstly, we speak about smart money, and that is a really powerful thing. So angels bring, very often huge industry knowledge to the table. So, angels will often invest in sectors that they have deep domain knowledge themselves in, and that they can pass that knowledge onto the founders with huge impact. And having that network, many of whom have started companies in those sectors before, they bring incredibly valuable contacts. It could be into customers, it could make connections that really change the dial and move the dial for these startups who are entering their growth stage. And often angel investors, they can insist or they can be invited to join executive board positions or non-executive board positions or even advisory board positions with the startup. And taking on those kind of roles can really accelerate the growth of the company and add huge credibility to an early stage startup. Also, high profile angels, they bring a huge amount of confidence, not just confidence to the founders that someone of note has invested in this company, but also confidence to the wider team, and even act as somewhat of an attractor to new talent coming into the company because of the confidence that they bring to it. High profile angels can also be a conduit to bring other angels into an investment round and to join future investment rounds. When you see a high-profile investor having done their due diligence in a startup, and if they've decided to put their hard-earned cash into a business, then it stands to reason that that many other investors will take the lead from that. And kind of beyond, I think the smart money and the other benefits that angel investors can bring. I think angel investors get quite a lot back from investing outside of cash as well. And some of those areas can often be the fact that they just get a kick from being involved in high growth and innovative companies, especially if the startup is addressing a problem that is quite close to the heart of the angel investor, and they want to make an impact in that area. So it might be an investment in something around climate technology that impacts the climate, or child safety technology that impacts that market. So something that has a purpose to it and has a sense of just being close to the heart of the angel. Often triggers an investment decision. And very often, and we'll see this in a panel later on, these angel investors are themselves founders. Sometimes they're serial founders. They've been around the block several times, and they just get a really great kick from helping the next generation of startups and giving back to the community that helped them when they were at the early stage of startup and growing their own startups. And obviously then there's the benefits of creating jobs, but not just jobs. These are usually high value jobs, and very often these are in regional locations or remote locations. And this brings an economic fuel. So the investment that goes into these companies through the journey of growth, and also the final investment at exit, seeds the economy and gives fuel to the economy to fuel the next generation of startups. So I've had the kind of pleasure of talking about the upside and the benefits and the rewards associated with angel investing. But it would be remiss of us not to talk about only the rewards. We want to also talk about the risks associated with angel investing and shine a light on some of those. So I'm going to hand you back to my colleague Clara, who's going to talk a little bit more detail about the risks associated with angel investing. Thanks, Clara.
Thank you, Larry. All right, well, let's get to the hard part of this talk. So what are the risks of angel investing? Well, there are a few, but one of the main risks are the high failure rate of startups. So statistics show that 90% of startups investment does not bring a return. And why? Because 9 out of 10 startups actually fail in the first 1 to 5 years. A recent research queried what were the top reasons for startups failures globally in 2024. And actually, this actually follows suit from 2023 as well. The following table here breaks it down, breaks those reasons down. As you can see, the go-to-market strategy at 22% and the lack of product market fit at 34% are amongst the highest reasons, amounting to 56% total. So it's emphasizing that the basic work around a well-rounded market research, product market fit, and market entry plan can mitigate over 50% of the risk of failure. That's very significant. Other factors include team problems and lack of funding, so insufficient cash flow or lack of ability to properly manage the financial resources. All these contribute to the failure of startups. These are factors that you as a future angel investor may like to take into consideration when deciding who to invest in. Other risks to take into account are that there is a long wait between the investment funding injection to then when the company exits. The long wait before exit would mean that the invested money will take a while to mature. Exit timeline is typically between 4 to 7 years, but could be longer or less depending. So the funds placed in this form of investment are not liquid, cannot be touched or counted on or withdrawn until it fulfills a successful exit. Or if your investment gets bought out, but this is not the usual route for an angel investor. The early stage, which is the initial stages of the development of a startup, are also the most volatile, but coincidentally, when the startup actually most need funds. The early stages are from the pre-seed to growth. Actually, somebody on the question asked that on the chat box, what would be the early stages of a development of a startup? So I have here this map. This actually shows the startup funding progression, and it also demonstrates the stages of development and the funding injections at each stage. The early stage of a company development often means that it is before the startup is generating its own revenue, and earlier than many venture capitals would fund. This map actually has identified the early stages in light green. So from validation or pre-seed to growth, Series C+, can be considered the early stage of a startup. The key point seen here is that the stages where these startups are most at risk and also require the most angel support. You can also see in the bottom there that the angel investors can become involved with a company at its various stages of progression and various funding rounds. By the way, this visual map will be included in the email sent to you alongside the glossary that we produced a little bit earlier. We'd be sending you an email with both of these resources so that you can use it as a reference in your future investment journey. So yeah, check your emails. It might be there already. Here's another pro tip for you. So as an angel, you want to be investing in a company to fuel the polishing of the product and to generate growth. You might like to also avoid investing in the initial stages of developing experimental science or early stages of developing a new technology. So what we're looking at here is that as an angel, you would want the founders to have validated their product prototype or services with their intended market before looking for investment, as your involvement and injection of cash is best served to execute the strategy, launch and grow, and not so much on the research phases. Some of the EU countries around here have other grants available, such as university research and development, or government grants, and even industry grants that may cover the early stages of science research and technology development. I want to take a look at the levels of involvement in angel investing with you. We have actually mentioned previously that as an angel, you can be prepared to support the startups with more than financial resources. And we also spoke a little bit on how you would be supporting them. But in saying this, it's also worth mentioning that angel investors can take on varying degrees of involvement depending on their preferences, expertises, and available time. I have simplified the levels of involvement as it follows there on the screen. It's passive, active, or very active roles with your investment startups. But let's unpack this for a little bit. A passive role investment approach could mean that an angel may invest as part of a syndicate or a group, but have very limited domain knowledge or interest in that sector. So as an angel, you would therefore put more trust in the lead investor to make key decisions and won't actively participate on the day-to-day operations of strategy or the discussions of, what should be done at the company. As such, the level of involvement may be minimal or more passive, with the involvement typically ending after making the initial investment. In essence, you would be contributing capital, but not engaging beyond occasional updates. Now, for a more active role, the investment approach means that the angel would be more involved in the process, potentially as a part of a syndicate or a direct investment as a solo angel, but the level of involvement here would be more or less medium. You may take on the role of a deal lead or actively contribute during key stages, such as deal closing and strategy discussions. So the effort required here would be more moderate. In other words, there's ongoing work, especially if you're leading the investment round or advising on specific areas like operations or scaling. An example of this is as if you're acting as a syndicate lead or representing the group of investors, taking an active role in closing the deals or interacting with founders regularly. Now, for a very active role investment approach, it would mean you become deeply involved in all aspects of the investment. This often occurs as a solo investor, you have nobody else to count but yourself, or as a key member of a syndicate. Now, the levels of involvement here would be quite high. In other words, you actively participate in strategy development, attend the board meetings, help with fundraising, and provide networking opportunities for the company. You might also serve as a non-executive director, as Larry pointed out before. So the effort required in this scenario would be significant, and you should be really counting on that when it comes to your time and schedule during the week, as there will be required a commitment of time and expertise before, during, and after the deal is done. However, by supporting the founder closely and sharing their expertise, making introductions and helping attract other investors, and especially at later stages as well when preparing for an exit, it's although it's very highly engaging, it also provides immense value for the startup. The key benefits for the founder in this scenario, it would be that it's easier to access more support, networks, and expertises, and there would be an increased confidence from other investors when they see a well-respected angel actively involved with that startup. So in conclusion, who is a good fit? While investing in startups is highly risky, as you could see, it can also be highly rewarding. But understanding the risks and rewards, including having a notion of how much work is required and the levels of involvement, helps to determine if angel investing is really a good fit for you and what role you want to play in the startup's journey. And speaking of good fit, one has to actually wonder how come angel investing has grown so much in recent years. Now, for this session, Larry will give us a brief overview of the history of investment in Europe and why it has grown over the years and to what it is now. So welcome back, Larry.
Cheers, cheers, Clara. Thank you very much for that. So yeah, we're going to look a little bit at a high level across Europe now, and just look at some of the reasons why angel investing has become so ubiquitous across Europe. Later on in this session as well, thankfully we have the director of EBAN is going to come on and give a more detailed synopsis of what's happening in Europe across angel investing. For this session, there's several reasons that angel investing has grown across Europe over the last 30 years or so. There's too many reasons to cover in detail in this workshop, but I would like to talk to you about what I believe are 4 of the most important reasons that angel investment has grown so hugely over the last 20 to 30 years. So firstly, this is the 4 are evolving investment strategies, government giving incentives for angel investment, the EU and individual EU country governments starting to fund angel investment networks. And then finally, we've started to see a decentralization of angel investment across Europe. So just to unpack this a little bit more, what do we mean by evolving investment strategies? There's kind of 3 areas to look at here. So it's the first is a move away from what we call a spray and pray strategy for investment towards more deliberate portfolio strategy investment. Secondly, we've seen investment strategies move from individuals to syndicates and using the power of the group and group intelligence and group funding to invest in startups. And finally, in more recent years, we've started to see the proliferation of crowdfunding platforms and equity crowdfunding platforms in particular. So looking at this move towards portfolio investment, if we again go back kind of 20 to 30 years in Europe, angel investment was largely limited to what is, to me, a somewhat unfortunate term, but it is a term used in the ecosystem. It was limited to what's called friends, family, and fools. So in effect, people who are in some way emotionally connected or through relationship connected to the startup, and for those reasons invested. So this type of investment, as you could imagine, there's a lot of there was little structure to it. We talk about this spray and pray. So you invest and pray that this is going to actually work out. So the outcomes tended to be unpredictable, and the outcomes tended to be ad hoc, as was the investment. But thankfully, there has been a move away from this pattern of investment and more towards diversifying investment across sectors and not just investing in local startups or startups that you know the founders in, and a focus on building portfolio. So the obvious impact of this evolution has been that risks have started to be mitigated, investments have been spread across multiple startups in multiple sectors. So if there's a downturn in any one sector, it doesn't affect the complete portfolio. And obviously this has resulted in an increase in the returns for the angel investors. So secondly, we started to see investment through informal syndicates helping to spread the risk of angel investment. So experienced angels started to move away from investing individually and to invest collectively and pool their funds into syndicates and invest via that syndicate. So the power of syndicates is well established at this stage, and one of the real powerful parts of the syndicate is the collective intelligence of the syndicate. So while not everyone is going to know everything about every investment, there's a good chance that someone in the syndicate, that someone in the room has domain knowledge that is critical to making the right decision or avoiding making the wrong decision when investing in early stage startups. And these syndicates have gone on to invest more often and invest into larger sums of money into larger portfolios. And we've seen in Ireland and across Europe, we've seen these informal syndicates, they've started to professionalize over time. So they've moved away from being more like informal clubs and syndicates to being professional syndicates, often taking on staff to organize deal flow, manage investments, manage the administration of it. They've started to charge membership fees. They've started to invest with other syndicates who might have specialist knowledge in particular areas. And they've started to look more like small venture capital firms rather than angel clubs. So that's been a very interesting evolution to witness over the last number of years. And then finally, in more recent times, we've seen this development across the business angel ecosystem of crowdfunding. I'm sure a lot of you have heard of crowdfunding, or more specifically equity crowdfunding. So this has started to bring what we call retail investors into the angel investment landscape, but it's brought them in at scale. So this is maybe a new term for some people here today as well of what a retail investor is. So simply a retail investor is a term given to what would typically be a less experienced investor who invests considerably less per deal than the average angel investor. But there's huge power in the crowd. There's huge power in numbers. And very often on these crowdfunding platforms, you'll have hundreds or thousands of retail investors pooling their funds. And obviously the impact of that can be quite significant on the funding round going into a startup. So crowdfunding is especially established in certain markets where they've got ahead of the pack in terms of introducing a regulatory framework to allow those crowdfunding platforms to establish and get licensed and work. This has happened in particular in the UK, in Finland, Spain, and Germany. But I think all across Europe now, crowdfunding platforms are becoming quite ubiquitous, with every country having a number of operative crowdfunding platforms live and working. So you might have heard of some of these crowdfunding platforms. Kickstarter is predominantly a US platform, but works globally, as is Seeders. And in the UK, we have a crowdfunding platform called Crowdcube. And as we see in 2023, over 10% of all angel investment across Europe was conducted through equity crowdfunding platforms. So it's really become an important player in the landscape. So we also started to see governments step in and a trend towards governments starting to incentivize angel investment, primarily through tax relief for angel investors who invest in the local economies, domestic startups. Some of these initiatives were quite innovative and started a number of years ago, up to 10, 15 years ago. Probably one of the first examples is a scheme in the UK. It was known as the Seed Enterprise Investment Scheme. So simply speaking, this scheme gave angel investors a tax break of 50% of the cash that they put into a startup, up to a certain limit. The scheme also gave investors relief that if the startup didn't work out for whatever reason and there was a loss accumulated, then that loss could be eased by a tax break also. And a number of these schemes are now developing or have developed all across Europe to incentivize not just startups to start, but founders to invest in their own startups and angel investors who come in alongside and invest in those startups also. And along with this, we've started to see the evolution of angel networks across Europe. And again, on this workshop and in this ecosystem, we use the term business angel quite a lot. But it's actually not a widely used term outside, or even today outside of this community. And if you look back 20 years ago, it was absolutely not a widely used term. It was a lot more mystery surrounding the what an angel actually is, especially outside of established markets like the UK. And so with the goal of addressing that, and with the goal of addressing the gap between what we call friends, family, and fools investment earlier and venture capital investment, which came at a later stage, the European Commission funded the launch of the European Business Angel Network, or EBAN. And we're going to hear a little bit more about EBAN later. In turn, EBAN led to the creation of business angel networks across several European countries. And Ireland was a good example of that case. So the Halo Business Angel Network, which the Access BIC were proud to be involved at the establishment of it in 2007. And at the time, there wasn't any formal angel investment network in Ireland. The goal, which we thought at the time was quite an ambitious goal, was to develop the ecosystem to invest 1 million of angel investment annually. So that was seen as a very ambitious goal at the time. In hindsight, that goal was incredibly conservative. So by 2022, HBAN, the Halo Business Angel Network, was investing annually over 33 million of pure angel investment into startups in Ireland. But the really interesting thing about that angel investment, it's the first investment into these companies, and it goes on to leverage a huge amount of additional investment, leveraging up to 5 or 6 times that original investment. So that 33 million ends up leveraging over 150 million of investment annually into startups. That's a real game changer for Ireland. And we've seen that example replicated across Europe with many similar stories. And even these networks are accelerating because they're building on the experience of the networks that were established before them, and learning from the good things that they've done, but also learning from the mistakes of other angel networks that have been developed. And finally, we've thankfully started to see this move away from a centralized model. So again, going back into the early 2000s, the structure of Europe's venture capital ecosystem was very similar to the US model, with activity concentrated around a few very small or few very large and active hubs. So in 2000, angel investors and other funding groups were mainly clustered in large cities like London, Paris, Munich, and Amsterdam. So in fact, these 4 cities at that time in 2000, they accounted for over 60% of the total VC funding in Europe. So obviously a huge concentration there. Obviously, the reason for this was a lot of the high growth innovative companies were actually located in those cities as well. So there was an ecosystem of innovation and high tech companies, and the investment followed that. So thankfully, we've started to see this centralized model evolve over the last couple of decades. Hubs have started to develop in other cities and other countries across the EU, and blossoming in places like the Nordics in particular, and accelerating in the Baltics. So this share of 60% that we saw in 2000, by 2022, that had dropped to 40%. So quite a considerable decentralization of investment across Europe. So in conclusion, there's a lot has happened. We've seen these evolution of investment strategies, a move away from individual investing towards portfolio investing, the growth of syndicate investment. We've seen the emergence of equity crowdfunding. And all of these have driven significant growth in angel investing over the last 30 years. Governments have stepped in. They've started to incentivize through tax systems and policies, incentivize this type of investment. And the EU and governments have stepped in and formally funded angel networks and pan-European angel networks. So the impact has been significant. So there's more money now going into angel investing at an early stage than ever before. The returns for angel investing are improving and all the time. And so more funding and more support for angel investing, resulting at a point where the EU is competing quite well on a global stage, particularly in comparison to the US, who would have been very much the market leaders in this from over the last number of years. Okay, so we said at the start that we were going to open the floor for questions. So I think it's actually a good time to stop, and thankfully we have a very active audience here today. And while Clara was talking, we were answering some of these questions here as well. So just to highlight a couple of them here. Thanks very much for these questions as well. So there's a question on safe notes. So safe, it's a term we didn't explain at the start. So that's a simple agreement for equity. It's become a very popular instrument. So we talked about convertible loan notes. A safe agreement is in effect a convertible loan note, but with less conditions. So it operates the same way. So it's an easy way for an investor to invest in a company at an early stage without incurring large legal fees. So there are benefits to it, especially when a company is quite hard to put a valuation on. So, but in effect, it is a convertible loan note. So it's an investment now that goes into a company and it converts at a future stage into equity. So it's particularly popular in the US. It's moved into the EU and is quite popular across the EU now as well. It often gets used interchangeably we hear safes and CLNs kind of used interchangeably. And these are often used by accelerator programs. So the likes of Techstars or Y Combinator will often invest via SAFE. So that's a good point. Thanks for bringing that up. And there's another question then about light tech. I mentioned the term light tech. I suppose we mentioned light tech as the alternative to deep tech investment. So light tech we would look at as a technology that is difficult to protect in a formal or legal manner. So it's difficult to put patents around. We find software in particular quite difficult to protect. So and we talk about deep tech as being research based, usually patent based. The technology is quite costly to develop, and but easier to develop or easier to put patents around and legal protection. So that's what we're talking about. Light tech is something that is just a little bit more difficult to protect formally. So it's a couple of questions. We're not going to get to to everyone. I'm going to try and answer questions live here. Again, if we don't get to all of these questions, we are going to answer them after the session here today. So there's a question there. Are there any incentives on the EU side or individual EU countries that angel investors can use to invest in Ukrainian startups? I don't know the answer to that one, but hopefully our next speaker is going to be able to shed some light, or even our panel discussion after the break is going to shed light on that. That's a particularly good question. We'll start to delve into that. So thank you very much for that. Okay, so we're going to move on here. So I think we've looked at the kind of pan-European angel network. So we're going to dive down a little bit into Ukraine now. And for this session, I'm delighted to welcome Yuri Romanuka. He's the managing director and partner of a large syndicate called iClub Global. And Yuri's going to give an overview of the angel investor ecosystem in Ukraine. So Yuri, you are very welcome to today's session. Thank you so much for being with us today. So I'll ask you to leave your camera on, and I'm going to stop sharing here myself.
Okay. Thank you so much, Larry. It was a brilliant conversation, and your points and Clara, what you come up today, I think it's very important to highlight this exactly how it works, what exactly it stands for, and with all the examples, with the practical field that you also planning to share today, I think that will get us a perspective for the whole idea about angel investments.
Absolutely, thank you, Yuri. So if you want to share your slides, I'll hand the platform over to you.
Of course. Let me give me a second to figure out how it should be worked well, so I'm not screwed up to everything. Just a second, I will just give it a chance so we can see everything properly. Okay, just a second. Let's go on. So we will have today a conversation about exactly the topic of ecosystem, and especially in Ukraine, because we have a lot of things to come up with and understand exactly what it stands for and what it's all about, because the angel investment topic It's already a quite established topic in Ukrainian market because back in the day in 2010 when I was just starting out my career with venture capital, angel investment with my own startups, working with the accelerator program in Ukraine, I was amazed because there was significant impact for the industry itself and for the, I think, whole the nation about the technology and how exactly they change and disrupt our lives, especially in Ukraine. We have a lot of legacy in fintech. We have a lot of legacy in the hardware development and a lot of different kind of industry. We have a lot of innovators behind. But mostly what I would like to highlight that my experience is related to the venture capital. I'm right now running the iClub Global. We have 42 countries in the list of our members right now. It's mostly Europe, but originally we are from Ukraine. Our core audience was Ukraine. Right now it's around 35% of whole audience. And we managed for the last 3 years of active investments, invest in 85 companies, made brilliant 9 exits. One of the exits was to the Pinterest, one of the exits was to the Renault Group. So last exit we just made in August, it was through the secondaries. It's an amazing company in the US. I think that's again show that the venture capital and startups can bring the returns. And the secret flavor about the iClub, because we only show up in co-investing with the leading Eastern European fund, TA Venture. They are great in terms of the numbers and figures, how they working with the topic of early stage investments, because they already invest in over than 240 companies and made 83 exits, including 6 IPOs. And in my opinion, that's in any case, even like for US venture capital firm, it's robust traction results. And I'm enjoying my time getting the more and more perspective for our syndicate members to understand the topic all exactly about the strategy of co-investments, because with the venture capital, as Larry also mentioned, it's very important to leverage the risk factor because you always have the risk that something can go wrong. And it's not just about the company, it's something with the industry, a lot of factors. But anyhow, like we can find out the way how to do so, and we'll have some information about that. If we're talking about great examples of why it works well, as Larry mentioned, we have a company called Feudal. The story about the Feudal started out in Soviet Union when the Ukrainian university has the great idea about facial recognition technology. And it was the patent that was laid on shelf for the next several decades before great entrepreneurs in Ukraine like Yuri Freiman was find out this idea and technology and define the business case around that. So that's a great example on how the thing that's yet not have a business perspective or business implementation market fit can exactly in the right format make changes. To just also give us clear understanding, like some very important topics about these specific companies, I would like to highlight in the list of the co-investors of this company, Anthem Venture. This exactly the fund that was initially invest in Android when it was just a startup before it was acquired by Google. So if you're trying to understand the topic of the venture capital, it is very important to understand who you are co-investing with, who they are, what is their profile, how exactly they made significant impact for the industry or for the corporate world in terms of the exits, liquidity events, etc. Because there is a lot of important aspect that venture capital firms can bring to the table to the early stage startup to get their right perspective to the point of exits or maybe create large investment funding rounds. And it's very important because the whole venture capital ecosystem is driven by individuals and of course examples, role models. And I really happy that Yuri Freiman is part of our syndicate, and he's also one of our portfolio member because he already have 6 exits for now. And right now he still going further with the new ventures that we are also supporting with the iClub. And my personally, I feel that that's a story that you want to be a part of because it is a person that can show how exactly it works. And if we're talking about the idea about the impact and the whole ecosystem, I think that no one expected that the war will appear, because you see that the traction number in terms of the growth with investment perspective in Ukraine, I think it's showing like this J curve when we just have only growth exponentially. And the war agenda was hit badly Ukrainian ecosystem with just lower the whole investment rate up to 4 times less. And in my opinion, like it is the reality that no one was expecting to, because like we have a lot of great investors and large VCs that operating in Ukraine, scouting the companies, investing actively, and then we see this reality. But again, any kind of condition with factors like war, you're not able to predict that at all as investors as well. But it showed that we have resilience. We have resilience in terms of the entrepreneurial spirit. We have resilience in terms of how we do things and how exactly we can recover. And that's already on track, because we've seen the signs already this year that investment cycle is growing actively. We've seen a lot of different trends that I will also highlight today. But more importantly, that we've seen that entrepreneurs are going further with their ideas, with their implementation, and with their tractions. And if we're talking about performance with low factors, we can see that there is a very interesting topic that the seed stage is taking about 25% of the whole investments in sites the last year in Ukraine. And it's very important also to understand that the factor of the growing trend, the secondaries, is already on 16%. And these numbers will evolve in anyhow, because we are already seeing that there is many and plenty of startups on early stages just recently started out building something. And there is also examples of the company that's willing to restructure the cap table and to make these secondary transactions, especially with the growth stage. I will come back to this point, and it's very important to understand that the secondaries is a driving fuel for the whole ecosystem, because right now the IPO market is closed for the last 2 years. And I think that we just need to figure out exactly how to work well and how to create the liquidity for angel investors. And that's the answer. If we're talking about the fundraising starts, I want to mention the company like Preply. They are amazing, but just also to understand that this company was initially founded in 2011, and it took them a robust timeline to get to the point of Series C. And I think that they are great in terms of how they operate in their business, because all of the name that they are getting to the perspective of co-investing to the company, I think that's one of the famous VCs in Europe and US. And they are on track to reach the goal of unicorn status. I think in the next few years, it's very important. But also would like to highlight the company called Fintech Farm, because it's very interesting company that everyone should also see as a case studies how it can be done. So the Fintech Farm, it's originally founded by the famous Ukrainian entrepreneurs like Dmitry Dubilet, who is back in the day was created the leading neobank in Ukraine called Monobank. And in just a few years, they reached the stage of Series B. And it's exactly showing the pace of the startup, how it can evolve, not just in a format of decade, but just counting quarters, showing the progress, etc. We are lucky enough to get perspective and co-invest with the fintech as iClub and TA Ventures. And I definitely want to mention that they are one of the leading startups that showing traction results, not just locally, but internationally, because they already established business in countries like Azerbaijan, Vietnam. They launching their presence in India. And it's very important markets, because they are also not just established person, but also showing the perspective of the traction numbers. And if we talk about the fundraising path, they overall and the raise over than 45 million for this period of time. And in my opinion, there is not so many companies that can reach exactly the same case, even in Europe, in the US right now, with this condition that we have right now. But still, if you know exactly what you're doing, if you understand what exactly you are approaching from the market perspective and product perspective fit, that's exactly the answer how you can evolve that in this kind of space. In these kind of cases like fintech farm, I also want to emphasize, because we are always trying to find out the founders that has clear understanding about the industry. And in this particular case, you can see that Dmitry Dubilet, Alexander Vitis, and Nick Bilazorki, so they are amazing in terms of how they are deeply involved in ecosystem, and especially in the fintech industry in Ukraine. They have robust knowledge with a great success track. So it's not this kind of first founders or first-time founders that just trying to build something. It's already people that know how exactly operate and scale the business in the right format, because there is kind of a challenge model to not just launching an established company, but also to scale. If we're talking about the whole idea about investing, we see this trend globally because it is the answer that also Larry mentioned before. There is quite great traction number in terms of the growth with Syndicates perspective. As the managing partner of one of the leading syndicate, I can tell you exactly why it's so, because in my opinion, venture capital is one of the undervalued asset class, and there is not so many people who has clear exposure and clear understanding about this asset class. But the value itself, especially when you understand that the technology is driven factor for all the economies globally right now, it is the factor that you can be a part of this story. My portfolio that we have right now in iClub of examples of a company that was initially started out in 2010 with just an idea. Right now, this is a company that already reached 100 million IRR. And the goal here is simple: to see the whole path from all the beginning. The company was just started out as an idea to the public IPO placement, and that will be great to see and to understand how exactly it will evolve from the not just an idea, but all the strategy and company perspective. So these kind of cases creating a lot of dynamics. If we're talking about also syndicates, I would like to highlight there is plenty of syndicates that were just operating around topic of IPO. But as we understand right now, for the last 2 years, it is not the right strategy to focus on, because the market of IPO probably will recover, but no one able to predict when. Of course, this kind of condition put everyone that's even the later stage investors, they try to shift their attention to early stage. We've seen these kind of cases with the companies and venture capital firms like Thai Global, of course, SoftBank. They are leading later stage investors that right now operating in and focus on an early stage, because it is the time when you can create the great portfolio, because all of the existing unicorns were established exactly after the financial crisis, like we have in right now, with some metrics and factors of interest rate. If we're talking about the ecosystem in Ukraine, I think that's easy pass, because we see that the trend is evolving exactly with the same format. We already reached the mark of 5,000 investors who at least one time co-invest in startups. And I think that's also amazing, because we're showing not just progress from the numbers of investors, but also progress of the great examples of the companies. Like we have already 6 companies that reached the status of the unicorns that originally was founded in Ukraine and get to this point. And again, that's also correlated to the point that we have list of syndicates that's operating right now in Ukraine. Back in the day, when I just started out, we have only UAngel that was launched in 2014. Right now, we have a list at least of 8 syndicates that operating in the market. And I think the more we'll stay and see, the more we'll have more examples of this kind of format. And if we're talking about the landscape of the syndicates, I would like to highlight that this trend is showing progress in terms of not just topic of co-investment, but also showing that with great examples of the startup that established for the last few years after the war started out, we see that there is company that already can be reached like point of the break even, or even like going with exponential growth rate in a way that no one is expecting to, because we've seen these kind of companies and we're trying to also define them or just on early stage. But what I would like also to highlight, there is great co-investors, syndicates like Seed Venture Partners, Better Ideas, Taloka, Angel One, ZAS Angels, United Angels Network, and Angels of Ukraine. They are already operating on this market and they're already on track with co-investment. And 3 of these syndicates, they also have focus on military tech. And it's one of the trends that's very important to also highlight today, because again, Ukraine is creating not just a great startup, but also creating the trend itself, because it is a condition that we face right now. But through the legacy perspective of the founders' understanding of the topic, we can create great examples of the technologies that potentially will get to the point of reaching the format of unicorns, etc. And if we're talking about the miltech trends, I would like to also highlight that we have examples of the companies like Puntar. Also, we have the Chimera. These companies already creating a lot of examples where you're not just able to co-invest in startups in a way that you are securing your position with this trend, but also you are gaining exposure to the technology that creating the whole ecosystem of the company that we'll see during the next 5 or 7 years. And to support this like trend, Y Combinator eventually started out to also actively invest in miltech. And the first company that they backed was just in August. It's called Ares, and that's just the beginning, because I've seen this kind of trend with the venture capital fund that's already started to operate with this field. The answer is clear that it is the trend that will definitely have a lot of exposure to the angel investors and syndicate. But again, we'll have some clear discussion about this topic as well on our panel discussion. If we're talking about M&A track, like where the liquidity events coming to angel investors, I want to also show up that the trend itself, of course, were impacted with the war, but it is reality that we are on track with the recovery session. There is already a statistic that we're getting from the Carta and from the other sources that showing that the numbers of the companies that were acquired, it's already on the same level that it was before the war. And this kind of creating a lot of questions. Why it's so? Because the IPO market is still closed. Where exactly we can have the liquidity event? Yes, and the answer is simple. Like, the question for this question is, of course, the secondaries and acquisition early stage. We are already seeing the companies shifting, not just be acquired on late stage and of course on a growth stage, but on quite early, like pre-seed seed stage. It's also can be considered an option for acquisition. And it's also show up that the technology factor and how exactly the project or company is structured is very important right now, because it is reality that the M&A transaction will rise for that purpose. And if we are talking about the later stage or the growth stage, we'll see more and more chances to co-invest for the secondaries options. It is a format when the later stage investment can create the option to sell partially or fully their shares in already established companies that has proven metrics, etc., but with great discounts, because it is how it works like. And again, what I want to mention, that's the company that's creating the format of the secondaries, it's very important to understand that that's a factor that will drive the whole venture capital economy for the next 24 months before we'll face this reality with the changes with the IPO market. If we're talking about the dry powder, also a very important topic, because I saw some questions in chat that rise about that. But again, right now, it is the right time to start something? And the answer is the following: that funds that started out to operate, they're still on track with creating new funds, but we also seen that there is plenty of funds that yet not distribute capital that they raised before the war in 2000, for example, 21 or 2022. So they are losing track with around like 20 to 30% of their size of the fund to distribute. So that means that you will have a chance to make the exposure if you're building something meaningful and have a lot of great understanding about the industry and perspective, because not just new funds will take a chance to track your deal or track your company with co-investments, but maybe you'll have a chance to also find out this kind of fund that still sitting on the dry powder, but still have committed to the investors to distribute this capital and showing the returns. And if we're talking about the phase of co-investment, I don't want to just show you this bright world, but it is the reality that the pace between the funding rounds, it's getting bigger than just used to before, because like we saw with examples of the fintech farm, the company was reaching the Series B stage in just 3 years. But if we're talking about the market average numbers, we have right now around 18 to 24 months between the stages. So that means that if you're finding something right now, you'll raise the pre-seed stage, then you have 24 months before you get the seed stage. And after that, you will have an option also to raise the Series A. But in anyhow, like, I don't think that this kind of trend is just for everyone. It's also a question to how exactly you are flexible or coordinating a company as a founder, or you are getting perspective of the founder, understanding and vision about the industry. Because if your company is growing at least 3 times annually, that's a positive track for any kind of investors to consider as an option to co-invest in your company. But we'll see more of these kind of examples, because again, startup ecosystem in Ukraine is not something you already established for the last several years with a lot of players. And just to summarize the key takeaways about this presentation. So again, Ukrainian ecosystem is already bounced back with the rising startup numbers, like program that we have here, like Seeds of Bravery, and of course, funding rounds, and that's already on track. Angel investors, it's a trend that will evolve no matter what, because we have a lot of program already, like how we're participating today, that just give us an idea about how exactly this asset class works and how exactly there is a beauty about that. And the MilTech, I think it's also beneficial for Ukrainian ecosystem, because it is the reality that we are on track with a lot of deep tech innovations here in Ukraine already. And of course, we'll see more and more attention from the investors' perspective for this industry. And if we will shift to the point of liquidity, we'll have definitely options for M&A, at least with the great technology, if we're talking about the early stage, or we'll have options for the secondary transaction with the later stage investments that probably want to consider some company that have a better survival rate right now, especially with the market condition. So that's all what I would like to tell you about today. You can scan my QR code. It's just directly into my LinkedIn profile. I'm happy to chat and answer any questions that you have. But for that presentation, I think it's all. Thank you so much.
No, Yuri, thank you. That's a fantastic whistle-stop tour of the Ukrainian, not just angel ecosystem, but the wider venture capital ecosystem as well.
Sure.
So really, really appreciate that. It's great to get that insight. I'm going to put you on the spot quickly here, because we have one question that I can't answer, and it's related to are there any incentives on the EU side or individual EU countries that angel investors can use to invest in Ukrainian startups? So that's a question that's come through there. So for Yuri, have you any view on that?
I think that's a great question, maybe to ask about. But I see some progress in this direction. Again, like we have Seeds of Bravery with their grant program, definitely an option to participate in. It's easy, already have established vehicle that you can just apply for. And that's the first top of mind that we can consider as an option. A part of that, there is some program that's established for the startups, but most of the time they will require to set up the legal entity in these countries in European Union. In my opinion, it's a question for every founders to understand. But if we are talking about the angel investors, it is a reality. I think that like every country or every ecosystem globally will fight for the talents right now. It is a reality, like, that this decade for that we have right now, it's all about that. The people that create value, like a company that growing rapidly, it's the best topic that everyone wants to be inside their economy. So in my opinion, there will be more program that will establish. But for the Ukraine, I definitely want to stick with the Seeds of Bravery because they don't have any kind of restriction to set up entity abroad. It's completely plural established format for supporting Ukrainian ecosystem and Ukrainian startups.
Excellent, Yuri. Thank you so much for that. Okay, we're going to move on, Yuri, to our next piece here, which is, I think, is going to be very, very interesting. So what we want to try and do here is give the angel investors that are on this in the audience a real look at what it's like to be inside the room of a syndicate pitch or an investor pitch by a company. So we're delighted to welcome Julia Biedlecka. Julia is the CEO and co-founder of a very interesting Ukrainian startup called SLab, and they specialize in making sustainable packaging solutions. So we want to make this as real as possible. So this is the pitch that Julia has been giving or used for our recent investment round. And so we're going to let Julia pitch, and I'm going to ask some questions then that would be typical questions that would be asked of an angel investor pitch after. And please, again, feel free to, if you have questions for Julia that you think are relevant to the pitch, then by all means ask those as well. So Julia, I'm going to stop sharing here. So I'm going to invite you to come on and to share your own screen with your presentation. Good morning, Julia. How are you?
Good morning. Doing great. Thank you very much for having me here. Excited to do this round of the pitch.
Thank you for being a good sport and coming on and helping out today on Seeds of Bravery. So I'm going to give the floor to you. Hopefully it's about 10 minutes or so of a pitch, and we'll have some fun with Q&A after, and we're going to go to the audience for a poll and just let's see what the audience thought of the pitch as well, and have some fun with that.
Sounds good. So yeah, good morning everyone again. My name is Julia. I'm CEO and co-founder of SLab. And we tackle the problem of unsustainable materials. So let's take polystyrene or foam plastic or styrofoam. Every single unit that was ever produced out of it still remains somewhere on the landfills and pollutes soils, oceans, and even our bodies. But there are actually good news. The world has finally decided to change. And in just a couple of years, all the packaging materials have to be recyclable or usable. And this means that we need to eliminate 15 billion kilograms of polystyrene produced every year in the packaging industry. Small, medium businesses and corporations are already under the pressure of sustainability regulations, green policy transition, and customers' choice, where eco-friendly packaging is a must. So that's why we created SLab and introduced a truly green packaging solution that consists of only two plant-based components. One is agricultural waste. The other one is mycelium. Mycelium is a network of mushroom roots, and we use its binding power to create a strong and reliable material that can fully replace polystyrene. So SLab material and SLab packaging has the same features as polystyrene in terms of durability, waterproof, and thermal insulation. But after the usage, it can be thrown into the soil where it will fully decompose in just 30 days. So it is a natural replacement of polystyrene that can be applied in several industries, like cushioning for beauty and self-care, lodgements for electronics and devices, packaging for fashion and decor, and even thermally insulating boxes for food and pharmaceutics. And I will show you a quick sample of how it really looks like. So it does look like polystyrene, and has the same features. So our customers can say goodbye to polystyrene and embrace the power of a truly green packaging. And speaking of customers, we already have paying customers who rely on us for their monthly packaging needs. And in June, we reached 20,000 euros of MRR. And we also have successful pilots with such big companies as L'Oreal, JTI, and Nespresso. And also we have a pipeline of the future customers with the pre-orders who are waiting for us to be able to produce more packaging for them. And in order to produce packaging at the industrial scale, we have developed our own innovative patented technology that will enable us to produce at the industrial scale. And to have even more exposure, we have unlocked scalability with a simple solution where we optimize production line to fit into the 40-foot containers that will serve as the mini factories and then would be deployed at the customer's premises. So that's where packaging is produced. This way we go global by creating a network of the mini factories around the world. So utilizing this decentralized approach. And we already have strong partnerships with the big companies who would like to utilize our technology and have access to the sustainable packaging at their premises. So there are two business models. One from producing our packaging and selling it to the customers. And then second, from licensing our technology where we will utilize the monthly service fees for usage of the containers. So the roadmap in a nutshell is that we already built our first automated production line. Then we will optimize it to fit into the 40-foot containers that will be deployed at the customer's premises. And also our technology allows us to replace not only polystyrene, but other materials like board, cardboard, foam, and leather. And as well, there is a big potential in our technology itself. So we can introduce not only new types of the materials, but also our technology can make mushroom farming much more efficient. But this is something to come in a few years. Just imagine an impact. Every time you buy your favorite beauty product or TV set that is packed into S-Lab material, you significantly reduce CO2 emissions, save water, and make landfills free from polystyrene. And of course, there are other competitors who are doing something similar to us and utilizing mycelium to create new materials because mycelium has this great binding features. And those companies, they are not focusing on the technology itself, so they are not scalable. But that's what we did from day one. We decided to actually scale the technology to make sure that material is available and affordable. Also, we were able to reduce the onboarding time of the new customers to 3-4 weeks, where in comparison, our competitors take 6-9 months to start working with the new customers. And we source locally the raw materials, and because of the efficiency of our technology, we are able to make price of our packaging 2 times cheaper than the competitors. So the worldwide packaging market is worth 1 trillion euros per year. It is rapidly growing, and specifically the sustainable segment of packaging is the most rapidly growing in the packaging industry overall. And by providing biodegradable polystyrene, we plan to capture 1 billion euros market share within the next 10 years. Our core team consists of 10 people with 2 co-founders. So I'm CEO and co-founder, and I have a master degree in biotechnology, but at the same time, very extensive experience in leadership and in management roles. And then Eugene is the other co-founder. He is CTO, so on the technology side, he's an expert in automation, and assembling the production lines. And of course, we have a mix of business and engineering expertise in the team. And most of our team members worked with the big companies, and now they are taking the best of their experience to work with us. Also, at the same time, right now, we are onboarding 2 new people, like 1 biotechnologist and 2 engineers to further develop the technology. And we want to build the future of the packaging industry. So I invite you this to do with us. Thank you very much.
Great presentation, Julia. Thank you so much for that. But I really like just the clarity of the presentation of the slides and not too much text on there, so it all looks really well. Thank you.
Thank you.
Perfect. So yeah, I'm just trying to turn on my video here for some reason. I'm having some trouble with it. We just continue on here. I'm just having a little bit of trouble with my video at the moment. So just we want to make this for the audience of angel investors here. We want to make this as kind of realistic as possible. Okay, so I'm going to ask you the kind of questions that I know investors would ask after a pitch like this. And I'm sure you're used to this. You've been through the rounds like this before. But you mentioned some protections that you have and patents that you have for your technology. Can you tell me a little bit more about that protection and what areas of the product it actually covers?
Sure. So in total, we have 5 patents, and 2 of them are already filed. 3 of them are in progress, as we are working on documentation and preparing everything. And in terms of geographically, so of course, we had to start with filing the patents in Ukraine. And once we got the application in Ukraine, we filed patents in few European countries that we operate primarily. So like in total 10 countries in Europe at the moment. And then with the strategy that we have, we will have 30 months to also file patents worldwide, internationally. So this is, I would say, our approach. We have 5 patents that we plan to file worldwide, or we will have the worldwide protection, and we protect mainly our technology. So there are a few stages that are very innovative and new, I would say, in the process of manufacturing. So this includes sterilization process, shaping process. So let's say we are not using any plastic or cutting molds to produce our packaging, which normally even in the packaging industry itself are used, but we were able to create our own shaping robot that can do this without any shape. So this reduced also costs and CO2 emissions a lot. So these are like some of the examples of the patents. And of course, we have another patent for the whole production line, for the whole technology that kind of wraps it up, all of this innovation. And at the same time, we also have one patent for design, industrial design. So we were able to create our packaging with 90 degrees angles, which no other mycelium-based producers could do that. And I showed this example so that what I mean, 90 degrees angles, this is what I mean. So this is very sharp, and that is very hard to do. So we were able to create a technology that we can do that.
That's interesting, actually, because I've seen these products before, and it is a rounded edge you typically.
Exactly.
Yeah. Okay. It's all in the detail. So so there's good protection there for would-be investors. I just want to talk a little bit about revenue, and it's great that you spoke about 20K of monthly recurring revenue at the moment. So I'd like to get a little bit more detail about that. But while you're talking about that, if you can also talk about the pilots that you're doing with L'Oreal, with JT and Espresso, and these pre-orders that you mentioned of 100K. So just all about revenue. We're really interested.
Sure. Yeah, all around financials. So maybe easiest to start with the pilots. So we do have pilots with L'Oreal, JTI, and Espresso, and all of these are also paid pilots. So this is part of the revenue as well that we receive from them. And with L'Oreal, we are already on a more advanced level. So we finished the pilot, but we are working on the contract to become their supplier. And at the moment, we are going through the social compliance audit, which is a necessary step. And they promise us to give the results this week. They gave us preliminary that we are good to go. So basically what it means that once they verify us as the reliable supplier, we can work with the whole L'Oreal worldwide and being an official supplier for L'Oreal of the packaging materials. Then with JTI, this is actually the material or the packaging that we developed for them. So they have those devices, vaping devices, I think, and this is the lodgement that goes into the box. And with this pilot, we're also going to develop further, where they will implement this in a few countries, start with lodgement, then we'll actually go to replacing more and more packaging materials and utilizing our solution instead of what they use currently. Currently, they use polystyrene and cardboard. So this is like in a nutshell the pilots. With Nespresso, it's kind of the same. They have their coffee machines there where they want to put lodgements. But the revenue doesn't, it's not only pilots with the revenue, it's also small, medium businesses that order packaging on a monthly basis. And in the packaging industry, or I think with the industries that we work, the approach is that those companies that produce something, they normally have a fixed amount of products that they produce or sell every month. So in this sense, we can plan our recurring revenue, that if they need, let's say, 2,000 packaging units 1 month, that this means that they will need the same amount next month. So we try to work with them on the long-term contracts where we fix this amount of the packaging that we supply every month. Of course, I mean, I will be real that it's not the case all the time or every time with every customer. And of course, with some customers, we just can go further and have maybe 3-month contracts or 6-month contracts, so like shorter, but because of the value that those customers can bring, we are working with them. So I would say that's what our revenue consists of. And the pre-orders, naturally, they do include the pilots, further development of cooperation after the pilots with those companies that I mentioned. And also, we do have customers who reach out to us on a daily basis who want to use our material, but we are not able to produce yet as much as they need. So we are working on enhancing the technology so that we can produce for them as much as we need. And those companies are from kind of same industries: beauty, self-care, electronics, devices, fashion, decor.
Okay. There's an interesting question that's come in there from Sergey in the audience. I was wondering about this myself when you were presenting. So a lot of the products seem to be smaller. Kind of, is there limitations to this, or can it be used for larger products? Like Sergey's asking, when's he going to get his TV? Wrapped in your nice product.
So our material or technology doesn't have any limitations in terms of size or shape of the packaging that we can produce. I think it's more of utilizing this technology and implement not technology, but the solution by the customers. So of course they want to start smaller, and in terms of size and in terms of the amount of the material, they want to test. They want to see how customers react to that. And I think this is our next step to get into the TV sets. We actually had a conversation with Samsung in regards of TV sets and like specifically doing this. But again, with corporations, that's a long process, of course. And at the moment, they are pressured with all the regulations. So they do want to work with us. It just, again, takes time to work through all the process and, bureaucracy as well.
Of course. Okay, so we're going to continue on with some more questions now, but while we're doing that, just ask Abby to launch the poll. So we're going to bring us a very simple poll here just to gauge the reaction of the audience to your pitch here. So with just 3 simple questions: would you invest in SLab? Yes, no, and we're going to give you a maybe, a couple for maybe. How much would you invest in SLab? So 0, 5 to 10K, 10 to 20K, 20K plus. This is theoretical, folks, so we're not actually going to ask you for the cash at the end of this. And then at the end, we purposely asked Julia to leave out her slide about investment, which she did. So we're going to ask, do you think SLab successfully raised their funding round? And just a simple yes, no on that. So if you want to, folks, just start filling out that poll as we just move on to the next couple of questions here. So Julia, just like really importantly is route to market. Obviously, you've proven that you can get to customers, early stage customers, and quite large customers, which is kind of interesting. So can you talk to me a little bit more about that strategy and how you get to these customers, how you got to the customers to date, and how you're going to get to more customers at scale in the future?
Yes, I would say these are like 2 different approaches, that how we've been doing this so far and how we are going to do this. And I think we already started this transition towards what we did in the past and what we want to see in the future. So in the past, we tried to be as close to those potential customers as possible. So we did identify who could be our potential industries, potential even names and size of the companies that could work with us, that we could introduce the solution, that need this solution. And of course, it was important for us to target those companies who have sustainability policy in place, so we can show them benefits of using our solution and emphasize their sustainability. So this what we've been doing so far, trying to be as close to those customers through the conferences, through the events, through the acceleration programs, through own network, through the network of the network. So basically, we try to talk to as many potential customers as possible, and especially with those early adopters, because they're always companies that tend to be early adopters more than others. So I would say L'Oreal is exactly an example of being an early adopter and willing to work with startups and to help them to move forward with their solution. So again, lots of conferences, events, and being visible. Of course, we've been using social media as well. And we've been through a few acceleration programs. So of course, using network of those acceleration programs. And then, of course, mouth of word worked a lot for us, as people were just, passing information about us. And now we are actually transitioning towards having a proper sales funnel with automated emails, automated LinkedIn outreach with calls and constant follow-up, so like nurturing our leads. So we were able to create a good base of the leads, so lead generation, but also through participating in some of the events and exhibitions. So you always get a database of the participants. So now we are just nurturing those, working with them. And we recently hired a business developer who worked at Bolt. So we hunted her from Bolt. So she already did this in Bolt, all of those automated, I would say, outreach. So that's what we're working on. And of course, the face-to-face will always continue, and establishing strategic partnerships, I think, is possible more through the face-to-face contact. And we also been, well, I'm doing the spoiler a little bit, but we're using network of our investors as well, and they are willing to help us and to share whatever contacts they have in the industries that we need.
Excellent. Okay, that's building on the point we made earlier about the power of good angel investors or VC investors. Okay, so I'm just going to ask Abby if the results are available on the poll. We'll display them, but while they're being displayed there, Julia, I'm really interested in your decentralized manufacturing model. So that's being close to the customer and getting product to the customer brings a lot of advantages, obviously. But there must be some huge challenges with that model as well. So can you talk to me about what those challenges are, and also how you guys are planning to overcome the key challenges?
Sure. Naturally, we understand that this is something new would be, or actually we thought that it would be something new for our customers to utilize this decentralized approach. But as we started to introduce this idea to them, we actually realized that they already, or especially corporations, they are already close to their packaging producers, and especially those who use polystyrene. So polystyrene is quite light, but has big volume. So it is not very expensive to deliver it, and of course then leads to CO2 emissions. So those who use a lot of polystyrene, they try to be very close to the production of polystyrene, or have to build their own production line, or work with a packaging supplier who could establish the packaging production line at their premises already. So we realized that, first of all, this already fits into what corporations are doing. They are already wall-to-wall with their packaging suppliers. And then, of course, we asked about the challenges, the issues that they have. Of course, we realized that production line that we supply has to be fully automated. It doesn't have to disturb the process. It has to be mobile. It has to be small size. So that's all of those things that we tackle with how we develop, how we design those mini factories, that they are fully automated. They require just half of an employee or half equivalent of half an employee to operate. All the information is monitored and collected. All the data of sensors and what's happening inside is collected to one system where this operator can monitor it all. And also we are working on creating network of the raw material suppliers. So we control it. So we want to control that and actually give requirements to those suppliers. So which material should go into our container. And we do implement the predictive maintenance systems. So this means that a technology, a production line will maintain itself predictably. But of course, we understand that this requires, like the technology or the manufacturing, is required to supply it with a guide how to use it and with all the information for the users and for the training then. And at the same time, we plan to do the upgrade of the technology every 18-24 months, so to ensure that the technology is always up to date for our customers and produces as much as possible. So we get lots of questions about this. Of course, we are thinking all about it.
Yeah, great stuff, Julia. Okay, so we've the kind of news from the audience is good. I'm glad to report. So, just on the first question, none of the audience said that they're not going to invest. So the majority, 2/3 said they would invest, and 1/3 said they maybe would invest. It looks like you've picked up about 200K of additional investment here today. So if you
Nice.
could just drop your bank details into the chat, everyone can transfer the funds directly. And excellent news. 100% of the audience felt that you definitely did raise your round of investment. So do you want to tell us? Do you want to give us the information on what if you were successful in that round of investment or not?
Yeah, I actually do have a slide on that. So we closed our pre-seed round, so basically the first round last December in 2023. It was 700,000 euros that we raised in total. We actually planned to raise 500,000, so we got oversubscribed, but we still decided to go with it because, of course, last year was not an easy year to raise for the startups, so-called fundraising winter. And we raised from different entities, I would say. So we do have two syndicates, two business angel syndicates, and one of those was actually mentioned by Yuri in his presentation. So Zast Ventures, the syndicate, or Zast Angels. This is a syndicate that invested into us. Then we have Vesna Capital, that is kind of also a business angel syndicate because there are three partners who are collectively putting tickets. And then we have few international accelerators, like an example, Techstars. And at the moment, we are going through the acceleration program from BMW Foundation. It is equity free, but helping us to develop further and raise the next round. And next round, we plan to start Q4, so kind of close, about to launch the new round.
That's outstanding. I'm delighted to hear that the results of that, Julia. And again, look, thank you so much for popping on today. We really appreciate it.
Happy to be here.
Best of luck with everything. We hope to meet soon in the future.
Thank you very much. Have a great day.
You too. Okay, so we're just I'm going to hand you back to Clara here now again, and we're just going to move towards our break, but there's just some important information Clara is going to give before the break. So Clara.
Thank you so much, Larry. Right, so we're going to have I think 6 minutes break at this point. I want to just point out that we're going to be having our demo days, which are set up for when Ukrainian startups will pitch for investment. And you can subscribe to that using the link that's going to be shared with you in the chat box. There's going to be quite a few of these demo days, and they're going to be hosted by different countries. So Ireland, Poland, Denmark. Have a look and sign up, register so that you don't miss on other amazing Ukrainian startups such as Julia's and their pitch. So we're going to go out now, and we'll be back in 6 minutes.
Hi, folks. So a quicker break than we had planned, but you're very welcome back to the second half of our investor literacy program this morning. So we're going to move on here, but before we move on to our panel discussion, I'm going to actually ask Aidan O'Driscoll, who's our angel investor on the panel here today. So Aidan, if you can come in there, unmute yourself and put on your video. There's a question in the chat. I wouldn't mind you answering if that's okay. Okay, maybe Aidan is not online at the moment, so if that is the case, we might just move on with the panel here. Okay, perfect. So we're gonna have a panel discussion now with what I think is going to be a really interesting discussion. It's with a series of angel syndicate investors and investors in general, and it is we are talking to a wide range of investors across across different syndicates in Europe. So it's I think it's going to be a really interesting discussion. So firstly, we have Jerome Leclanche. Jerome is a serial founder himself with several exits, and now he is an angel investor in over 40 companies through his vehicle Seed 7 and Seed Capital. I'd like to welcome Olena Kleiner. Olena is the co-founder of a very interesting new fund called Angels for Ukraine Fund, and she's a serial founder herself, a co-founder, and a previous CEO. We have Taras Krychenko. Taras is an angel investor and a managing partner at Toloka VC. Toloka VC are one of the youngest and one of the largest Ukrainian angel syndicates operating at the moment. We have Denis Sharuk, former CIO, Chief Investment Officer at Colas VC. So Denis has a huge amount of experience in both angel investing, but investment banking also, and is an experienced angel investor. And we welcome back again Yuri, who gave the presentation previously on the Ukrainian ecosystem, and Yuri is the managing partner of iClub. So you are very welcome, folks, to this panel discussion. Thank you so much for getting involved and for helping out on Seeds of Bravery, and also helping out on the wider Ukrainian Seeds of Bravery Project and this investor literacy program. So it's great to have you all on board here. So I've given a quick introduction, but I think each of you, I'd like to give you a chance to properly introduce yourselves and give a bit more detail about your own background and journey into angel investing. So Olena, if you wouldn't mind kicking off, please.
Yeah, hello to everyone. I would like to say that we are quite a new fund in Ukrainian landscape, but we are backed by quite experienced business angels community. So it is called Core Angels, and it is from Portugal. It has already 10 million portfolio in their total interactions, and they invested in more than 96 startups, and they have several exits. So they help us to create the special connection between European angels and Ukrainian ecosystem. And we are eager to attract as many international partners as we can. That's why we're spreading the word everywhere. We're speaking with EBAN, with BAE. We are partners of Ministry of Digital Transformation and all biggest partners of Ukrainian tech ecosystem. So we had one investment committee this summer, and the second one is happening today by happy coincidence. So I would like to invite maybe some angels who right now are listening to this program. You can connect me through LinkedIn, and I will send you the invite. Thank you for the time. Let's move on.
Cheers, Olena. Thank you so much for that. So Taras, we might come to you next for a bit more detailed introduction to yourself.
Yeah, thank you very much for inviting to participate in such a great event. I'm so much happy that we have your structural effort to improve the literacy and understanding of what the angel investing is. So you're doing a great job, guys. We are Toloka.vc. Toloka is probably the youngest Ukrainian syndicate. We have started and made the first deal only in October of last year. So far we have invested more than $11 million. And we are consisting of around 945 Ukrainian and non-Ukrainian angels, but most of our angels are Ukrainians who might be like 50% in Ukraine and 50% elsewhere. We also have angels from United States, Israeli, European Union, and even Australia. And we are investing on average in one deal per month with the average ticket of $1 million American dollars. And we are industry agnostic, but we are looking for the companies which have the proven track record in growth and business development. I think the investment through the syndicate is probably one of the best alternatives for someone who is just starting, because you will be able to learn gradually and actually develop your own strategy. So I am very interested to share with the audience what we have learned and actually which mistakes I had as an angel investor myself before we created the syndicate and started to make it all together.
Perfect. We look forward to hearing about the some of the good things that you've done, but some of the mistakes as well, Taras. Thank you. So Jerome, you're welcome. So if you'd like to give a bit more of an introduction to yourself, please.
Thank you, and thank you for the invitation. I second everything Taras has said. I'm Jerome. I've been in tech for over 20 years now. My path started very much as an entrepreneur and then went into angel investor. And now with my partners, we created Seven Capital, which focuses on investments in the dual use technology space, especially in Eastern Europe, especially in Ukraine. And that's where we are now.
Very good. So Jerome, I might just stay with you for a second. You mentioned a term there that might be new to some of the audience members here. So you mentioned dual use. If you wouldn't mind just explaining a little bit more about the context of dual use and why that's relevant, especially today.
Absolutely. So the term dual use is there to mean any technology that has applications in both the military space and the civil space. There's very famous technologies which came out of the military today, which run the world. We can think about GPS, microwaves. We can think about the internet. And this is where a lot of very, very promising technologies come from. Obviously, with the war, there's a lot of startups that currently focus on dual-use technologies, and that is where we're looking at. More specifically, dual-use generally doesn't include pure defense, so it will not include weapons, ammunitions, armored vehicles, anything like that. But it might include things like civil defense, police, things usable by police or firefighters in case of disasters, medical technology, and so on.
Okay, excellent. Thank you. Just thought it was important, given that this is an angel investor literacy program. Just any new terminology, just to delve a little bit deeper into that. So thank you for that. And Dennis, good morning here. Good afternoon, potentially where you are.
Hello.
So if you'd like to introduce yourself and just give a bit of detail to your background.
Yes, hello. My name is Denis Shauruk. I'm a former investment banker. I work in investment banking industry for 20 years, and I'm a active business angel. I have my own portfolio of 15 companies, one exit, and I'm a member of more than 10 different business clubs, and I continue to develop my network. I continue to develop my pipeline, looking for the diversification of my portfolio. So happy to be here with you guys.
Perfect. Delighted to have you, Dennis. And Yuri, I know you've been on camera already this morning, but I'm going to ask you to introduce yourself for any new audience members that have jumped on.
Of course. So my name is Yuri. I'm a managing partner of the iClub Global. With iClub, we are crafting the story of liquidity for the angel investors in Ukraine and globally. As I mentioned, 42 countries is already in the list. We are creating the format of co-investment in early stages possible, but leverage the risk factor of the venture capital as an asset class by co-investing with the leading angel investors, with the great exposure in the industry, with the founders, with the traction in industry, with, of course, co-investors as a team venture that made a lot of exits and great portfolio strategy. And the goal is simple, like as I mentioned on my slides, the trend of the angel investment, it's the fact. And we are just established the format of exposure of knowledge about the angel investors for as an asset class for the audience, of course, of the retail investors, etc. But I feel that it's already show up the traction and facilitation with the whole ecosystem, not just in Ukraine, but globally, how exactly it should amplify the format of co-investment and how exactly it should show up that the returns and startups, it's something that's already proven. And definitely happy to chat today about some lessons learned, practice, experience, and knowledge about angel investment. Myself, I also invest in actively. I'm investing through the iClub. And yeah, it's like I already show up some startups that I also part of already. Yeah, thank you.
Excellent. So look, we might stay with you. We kind of covered this a little bit at the start, about why angel investors would get involved. And there's some kind of obvious reasons in terms of returns and some not so obvious reasons as well. So Yuri, I might just stay with you on that question. What was it that actually brought you into the whole ecosystem of angel investing?
Yeah, I think that venture capital class is amazing because if we're, for example, comparing to the public market, of course, you have these prediction ETFs that give you the perspective around like 4 or 3% annually IRR. So like you can just get into the perspective of 30 or 40 years to gain some like robust 2 or 3x returns. But with the venture capital as asset class, it is a reality that you can gain their returns with double-digit access and with double-digit IRR. And that's exactly what I stand for, because again, we are on the field of the risk, because you can, of course, invest and lose everything, but anyhow, like you have also chance to succeed with a robust number, because if you are succeed, you get in the returns in a format that you are not just like lower format of core investor or investing returns. And my goal with the venture capital and investment is simple. Like I'm constantly learning, because I think that while you are dealing with the startups, with angel investors, you always have to learn something new. There is no one, I think, that can just master the topic of the investments in venture capital. There's always something to be learned from. And yes, like we with iClub, we've seen a lot of founders that start out to invest themselves. And it is the reality that this is a person or individual that you can learn a lot from, because they know how exactly to build a company by themselves, and they know how to exactly like understand the topic of the industry condition that they are also can format over the factor of the due diligence. And the following following logic get me to the perspective that with the current condition, of course, with the technology sector that creating whole the economy value, it is reality that you can just shift your focus not just as a side hustle, but potentially a career. Because most of the time, if you are working and but on site you have angel investing, it can be also career path for you, because you can create yourself and create your portfolio in a way that it will be your like full-time job as angel investor. But that's will be amazing path, because you'll always have something new to discover.
Very good, Yuri. That's great insights. So, Elena, I might come to you there as well, from the perspective of you being a founder and a serial founder, and then moving into the whole world of angel investing. So, what was the reasons behind that?
Yeah, thank you for that question. Actually, yes, I founded 7 companies during my life, and the most long-lasting company is consulting company. So I've been thinking, how can I apply my consulting experience into new spheres? And I was searching. And after the war was activated, I had to escape from Kiev to Lisbon. And somehow I became a local business leader there. And very fast, some Ukrainian business community appeared there. So I was invited to give the interview on CNN to give them understanding what I saw during this time of escape. And that's how I became a person to whom everyone from Portugal who wanted to help were directed. And that's how we met with Rui Falcao, who is the president of Core Angels, and he is going to be the speaker of our next workshops. Yeah, and he said that we want to help Ukrainians, but what we can do the best is to do angel investing. And they said that they want to organize special fund for Ukrainian tech to help through their network, which is more than 300 angels right now at 13 groups, to work by their methodology, to arrange this process as they do it right now, and to connect ecosystems between each other. So we started to do it, and for me it's quite new, and I'm learning at the same time. I passed through the program for people who want to open the fund inside Core Angels. So I learned all these processes, and right now I'm responsible for startup scouting. So we received more than 300 applications from our Ukrainian best startups, and I admire them. So we selected 4 brilliant ones for today's committee, as I said. And yeah, I like this process, and I really believe in Ukrainian entrepreneurs. And also I see the problem that with this transition from traditional business to IT businesses, I see that many entrepreneurs who already have some money, some businesses, and they want to invest in something else. So they more likely to invest in real estate or some restaurant openings instead of invest in IT sphere. And that's very good, that I'm happy that we do this program, because it helps Ukrainian entrepreneurs understand how to grow their money with tech sphere.
Absolutely. And that kind of speaks a little bit to what we talked about at the start of this session today about angels investing in startups or in initiatives that are close to the heart. And I don't think we could get a whole point closer to the heart than the purpose behind Angels for Ukraine. So thank you very much for that. So Taras, you might put a bit of color behind your transition into angel investing for us, please.
Well, for me, there was no transition, because I've been always investing, I don't know, for decades. But then it was a period of investing without self-understanding, and the period of self-reflection and understanding of the mistakes, which happened to me in the beginning of the last year. And I understood that if you want to invest and expect for certain returns, you must do it according to your own strategy. First. Second, you must do it on the ongoing basis, and you must build your own portfolio. So you cannot really invest in 1, 2, or 3 companies and expect good returns. It would be pure luck if you get anything. So it has nothing to do with the professionally done job. Then I understood which were my major mistakes when I was investing. First of all, I was investing in 2 young startups. I am like 49 years old now. And if you invest in a young company, most probably it will take you 5 to 10 years before you reach any size or scale. For instance, on the startups, in order to reach revenue of 1 million, you must spend 5 years on average. So if you invest in a very young startup, pre-revenue startup, you must be willing to understand that it will take you probably 10 years until the exit. Can be earlier, good luck, but most likely not, 12 years. So I have a bunch of startups where I'm sitting for 7, 8, 9, 10, 12 years. So I wanted to invest in a later stage startups, which already have revenue. Second understanding was, in order to invest there, you need to come with the size, because they are not interested in $20,000 or $10,000. They're interested in million. And in order to get million, unfortunately, I don't have 1 million in my pocket for every investment. So you need to do it together with your colleagues. So you need to have the syndicate. You need to have people around your strategy willing to join you in your investments, or you willing to join them in their investments. So, and the third third mistake was not doing things properly from the legal standpoint. So you need to come up with the proper legal structures, because when you invest and then you receive nothing, not because the startup went bust, but because you did not do proper legal job, it's a pity, really. So and that's how the syndicate appeared. So in order to invest, you need to have partners in crime. You need to really find people who share your strategy, who want to do it together with you, and then you will be able to come professionally to the larger startups and invest them millions. And that's how I made the transition from the, I would say, amateur angel investor into the professional. We in Toloka, as general partners, we are always investing in what we have. So we are never brokers. And we are always putting our money, our family money, in each deal we propose. And then people choose according to their strategies. So that's what I'm basically suggesting, to have your own strategy, to understand that you need to invest on the portfolio basis and to do it properly with the proper partners and the proper legal support.
Excellent. I think you've covered a huge amount of ground there really quickly, Taras. It's really, really interesting. But I think that the key there is, and this happens so often, I think, with new angel investors that join syndicates or step into angel investing, because all of these companies are so well prepared to pitch and they all look so interesting and they look so inviting. If you're new into angel investing, then you could end up investing very heavily in the first 2 or 3 startups and they don't work out, and you end up stepping back out of angel investing because it didn't work out. So I think from running an angel investment syndicate here and developing the network in Ireland, that's a message that comes across over and over again. They've got to step in with a strategy, and it's got to be a 5 to 10 year strategy to build a portfolio. And like the piece of advice that we had earlier on from this American investor, it is, you've got to invest for the long haul. You've got to be patient on this. But as well, it was a key point you made there on legal structures. So early stage investors, if the proper legal structures or legal documents don't surround your investment, more advanced later stage investors end up diluting your investment, and even though you've taken the risk to invest early, you get nothing on the exit. So that's a killer. So we'll come back to some of those points there, but you covered a huge amount of ground there. So Jerome, I just want to come to you as well there, and the same type of question. You had experience in founding companies previously, and you've gone over to the other side and started investing, but investing in a different way through Seven Capital, through accelerator programs and incubation programs, and a couple of different ways. So if you wouldn't mind putting a bit of color around that for us, please.
Yeah, it's interesting because I think as founders, we seek to have the biggest impact, positive impact on the world that we can. And very often you have a lot of founders that get distracted by a lot of things that they want to do, but they cannot because they have to focus on their one startup. And this is where transitioning into investment can be kind of this enabler to let you be active in more than just one solution for one particular problem, but give your expertise in multiple solutions. I think it's, Olena might correct me there, but I think it's what can be attractive in also being a consultant in startup. And that was really what enabled this transition for me as an angel investor. And then Seven Capital was really born out of, we took an unusual approach of creating an accelerator program first, to bring together with my 2 co-founders are also both serial entrepreneurs with similar experiences as I have, and we really wanted to communicate this expertise, this experience, and enable the most positive change possible. So that's how we got to the accelerator program, and the investment fund was a logical next step to be able to invest in those startups.
Very good. So I might stay with you there, Jerome. You've introduced the concept of an accelerator program. So can you give a brief description to our audience of what that actually is?
Of course. An accelerator program, and you might have heard of some of the most famous ones. We mentioned Techstars earlier, Y Combinator is another. An accelerator program is really a program for startups destined to prepare them for investment, streamline some process to get them not only ready, but put them in touch with the right investors, potentially the right customers, review their business model, their long-term strategy, and so on. So it's a lot of preparations and mentoring. And for investment funds, it can also serve as a type of due diligence, because you really get to know the startups that go through, and you really get to know if by the end of the accelerator program, after they have followed your program, you want to invest into them or not.
Excellent, thank you. I think it's just important to just dig a bit deeper into that concept of acceleration, which is very powerful actually, and hugely common across the ecosystem. So Dennis, I might go to you as well. Like you've your background is in investment banking, or for many years was in investment banking and transition into angel investing. So if you wouldn't mind just talking to us about that transition and the reason for moving into angel investing.
Well, I think it wasn't like a goal initially for me. It just happened. But I was, as a traditional investment banking industry is more focused on traditional sectors of economy, like physical production, banking, etc. I was always interested in software companies in this industry, and how they developed, how they grow, how startups are made. So for me, it was like a hobby initially, and yeah, I started to gradually make my first investments, and then many things happened, including COVID, including the war, including many I would say force majeure circumstances. And in these circumstances, the software company appeared to be very resilient. They not only managed to survive, they managed to grow further without big problems to them. So it shows that this was the right sector to be, and I decided to expand further in this area. So this was first part of my strategy, to invest only in software company or in hardware company. The second part, due to this instability in the region, there were many immigrant founders. So all of my startups are immigrant founders, and this became second part of my strategy. And third part of my strategy, as it was mentioned before, investing in startups, it's long-term investment. So don't expect fast result. And 5 to 10 years is a normal time horizon. So provided that I'm not too young, I'm investing in companies which already have revenue. This is the third part of my strategy. But yeah, that's basically how it happened. And now I'm basically full-time working with startups.
Excellent, Dennis. Thank you. Olena, I might come back to you on this one. And Jerome as well might come in on this. The kind of moving from being a founder yourself into angel investing. There's always challenges around that, obviously. But there's huge benefits too if you have been in the founder camp and you move into angel investing. So just talk to me about that. Do you think previous founders make good angel investors or not?
Yeah, why not? Well, it depends. In our strategy of the fund, we are eager to have as an angels, current entrepreneurs, founders after exits, and something like that, because mostly they have huge network because they need it to develop their companies. They have resources. They have also some knowledge about how to build the companies, and those knowledge mostly are more important even than money. And I always like the phrase what Rui says, which is my partner. that every time when we talk to a startup, he asks, what exactly help you need, except of money? What exactly you need right now? And if we understand that we can provide that help, then we're more likely to invest in those startups. That's why, for now, for example, we chose one startup from defense tech, because right now Ukraine needs to develop this sphere. And we understand that except of the tickets they ask, for example, it's 70K for now, we can provide a network which they can use to develop their startup. So the answer is yes.
Absolutely, and we spoke about that as well. It's about smart money at the start. So cash is a commodity. Cash is available from lots of different sources. But what angels can bring to a startup in terms of that smart connections, the confidence that they can bring to the rest of the investor community, is far more powerful. That's not a commodity. So Jerome, maybe look at maybe the flip side of that founders going into angel investing, can they sometimes be a little bit too eager to invest? Do they put the cold eye of the investor onto every proposition, or do they say, if I was these guys, I'd like to get investment? And it's a little bit of a conflict.
I don't want to call it a conflict, but there can definitely be, and I think it's the path for a lot of angel investors that were previous founders. It was my path as well. It starts with a cash injection, an angel cash injection in a startup that you like, that you feel a connection with. And it becomes a question, Taras touched onto that earlier, the early mistakes that you might have if you don't have the proper framework and so on. It can become, you can just hit issues in how you structure your investment, how the actual impact, maybe you've given too much and the cash is being misused. And that is also a responsibility of the investor to understand what the startup actually needs versus what the startup wants. And at the end of the day, yeah, if you want to maximize your impact, you will want to fix these issues. And early on, you might just want to be part of the story, and that's why you're investing. It's not even necessarily for the returns. And also, I know a lot of founders, they can be kind of, I don't want to say allergic to the money, but they don't want to be dealing with this, right? And maybe a previous founder has gotten a very good exit and has a lot of spare cash. They don't want to be actively investing into anything, but they do want to be a little bit of an angel for the startups they like, for the kind of inspiring stories that they see. And that will often not be structured, and at the end of the day, it's going to yield lower returns, much higher risk. It doesn't mean it's not going to work, of course, but if you look at the numbers as a whole, it will usually be the investor losing out on this, and sometimes the startup as well, unfortunately.
Yeah, I wanted to continue from here, Jerome. Thank you very much for bringing this framework of what you actually want and what you actually need. And most often than not, when the angel starts to actively be involved in the life of the startup, emotionally everyone is happy, but then it will be business of disaster. Because the startup will not be able to grow enough to be professionally strong itself. And then it will be very difficult to rise the next level of investments. And the angel investor will burn money and buy himself or herself a job. And then they will embrace each other and go into the abyss. And I have seen the stories many times. That is why, of course, everyone wants to talk about love and smart money, but you need to know that the business is quite a disciplined thing. And first of all, the founder and the team of the startup must be willing to learn and not to try to incorporate the angel with all his pros and cons into the work of the startup. But more than that, they need to be independent.
Absolutely, I think they're great points, and absolutely that you can't get emotionally involved at the end of the day. This is a business, and you've got to do what's right for the business. But that happens for sure. Look, we're just to kind of wrap things up a little bit here, folks, and maybe to just look quickly around the room. Yuri, lessons learned from your lifetime so far in angel investing.
Yeah. So I saw there is of course we interact with a lot of deals every year. We check in like more than 1,000 companies that's going through the pipeline of fund in iCloud, and we definitely don't want to co-invest in startup that's actively distributed across the industry, across the market, because again, the good companies most of the time they securing their funding and of course rounds from the investors that they have established relations with, and we have access to these kind of companies and to the kind of pipeline. And I believe strongly with this kind of mindset that the venture capital is yet not there in terms of like how the market operates itself. It's still the cohort of personal relations that you need to be part of. Aside of that, of course, no one wants to be a person that's putting the last or largest check in the company, because we know that these kind of situations that we face right now, especially with the public markets, create a lot of question about the liquidity of the growth stage investors. And these kind of investors, I don't think that they will never have a returns for their investment in terms of like, double-digit access. It will be like maybe pass for the next 3-5 years just to show up at least like 1.3 or 1.2 x liquidity for the investors. And if we are talking about the exposure of the pipeline, if you want to be an angel investor, it's not the hunting for the unicorn like I saw in the question list that we have today. You should be diversify yourself across the different industry, because if we are talking about like right now, if you're constantly trying to invest in AI because it's a media topic that everyone is talking about, you end up with nothing, because like there is a lot of risk factors about the bubble of industry. If you're talking about like, for example, blockchain, it's the same. But if you're a wise investor, you need to put diversification across different industry, different geos, different kind of stages. So you'll be filled in with a format that you have completely structured portfolio. And what I also want to emphasize that in Ukraine, of course, we have a lot of founders that have quite broad focus in terms of what they're doing right now. We have hardware, as I mentioned, we have software examples, we have Miltech, etc. But the most crucial is to create the portfolio that you will grow together with the founders as your story behind. Because again, like, as you are the angel investors, you come up with the money, as Jerome mentioned, and you, Larry, but the money is not the answer. The question is like whether or not you understand the vision of the founder, where exactly he is going to, what exactly the fundraising stage will be for the next 2-3 years, what exactly these founders can bring to the industry as an impact. But if you even not have chance to chat with the founders, that's a big question. Maybe you not even understand the topic at all. If you are only dealing with the broker who trying to explain the company itself, it show up that you are in a position that you're dealing with a middleman that trying to sell something for you or to you. So that's very important to deal only with the founders that you know in person or have a chat with, understand that they are doing something properly, not people who are trying to sell you something.
If I can add on to that, Yuri, because I completely agree, and you touched on the point of diversification, and it's also important for, I think, in investors, especially early stage investors, angel investors, to still invest in things they understand. But because you need to diversify across multiple industries, you do need to build up understanding of more than just a single industry. Of course, you can have like very pointed expertise in one particular industry and feel a much better expertise there. But building up a knowledge, and again, this is as a previous founder, so it is kind of a different point of view on this, but building up a knowledge of like multiple industries that you can have an impact in, and that where you're going to be able to apply your knowledge, apply your network, is going to be important, rather than just diversifying into things you absolutely don't know, into sectors you're completely unfamiliar with, just because you might have a connection or two there or something like that.
Perfect. So
Yeah,
Taras,
especially with the hype of AI, Jerome. Especially with the hype of AI, everyone is talking about the AI, but no one is yet get some liquidity or returns from this industry. That's a big question. Like, who will definitely will get these returns?
Of course, you must be cool, especially with AI. I completely agree with Yuri. But I would try to consider differently the point Jerome brought to the discussion, because we very often overestimate our knowledge. Let me say, I have my son and my daughter, and do I know them? No. I know a little bit about them, but do I invest into them? Yes, I do heavily. And it's not because of emotions. It's because this is the only way. So don't overestimate your knowledge. My daughter now does her PhD at Cambridge, and I cannot even pronounce the theme, what she is working on. But I do invest into her ability to have better life. The same with startups. You need to have your strategy, and your strategy must not let you invest in something blindly or emotionally, as colleagues absolutely correctly said. But if you invest only in restaurants because you had a restaurant in Kiev, is a terrible mistake.
Very good. Okay, folks, we're going to wrap things up. Just one quick thing. I'm going to go around the table here and just ask, are you looking for more angel investors in your organizations? And if you are, how can people get in contact with you? So, Elena.
Yes, as I said, we are quite open to have new angel investors. And today is going to be online second investment committee of our fund. But what is the most important in this? It's not only the access to the selected startups, for example, right? It's also the access to experience of other angels, which who already had some mistakes, their own traction, and so on. So it's better to be a part of community, which have most frequently asked questions. So has all these answers. And to do first investments with community, learning how to do it. That's my point of view. So you can connect me through LinkedIn, and I will send you the link, and we're open.
Perfect. Okay. Taras, with Toloka, what's the situation with investors in the audience are interested?
Well, Toloka stands for putting the forces together. That's the traditional Ukrainian habit of building the house all together. So, of course, we are looking for the strong LPs, limited partners with money and expertise. And it's very easy. You go to toloka.vc, fill in the form, sign a non-disclosure agreement, and then you will see the investment courses, and you will see, of course, all the opportunities to invest or ask your questions. Because contrary to funds, in syndicates, you are free not to invest.
Mm-hmm. Absolutely. Thank you. Yuri, iClub, how do people get in contact?
Yeah, so it's through the App Store or Play Market. You can easily download the app. We have seamless process of confidentiality about your information, of course, your entity, because we check in all your background, the source of the wealth, the exactly who you are and where exactly you're from, to make a security for the community itself. And of course, what I would like to mention that we already in process of obtaining the crowdfunding license, and that's get us to a completely new perspective, because back in the day we used to be an angel investment club, Then we migrate to the format of the syndicate. So the next phase of our involvement from the scale perspective is to obtain the crowdfunding perspective license. So that's already on track, and next year will be have one, and that gives us to a point when we can distribute mobile application with a seamless flow of the marketing channel that we are planning to have. That's what we have.
Thank you so much. And Jerome, yourself as Seed or Seven Capital, is that open or is it a closed fund, or what's the situation?
Yeah, so we're looking for anybody interested in the dual use investment space and the dual use technology space. If you want to reach out to us, it can be through LinkedIn or 7capital.vc/contact. I just put the link in the chat. And yeah, we're looking at people, not any specific needs, but who wants to be involved in what we think is going to be a very buzzing industry in the next couple of years, and where we're seeing a lot of movement.
Excellent, thank you. And Dennis, I know that you're a member of several syndicates that I'm sure are all open to angel investors. But I'm just going to ask you one question that's come from the audience here. When through the syndicate, when you're looking at valuations, who sets the valuation? So what's the process that you've seen?
Well, usually the valuation is set. So we don't negotiate valuations, because usually the startup comes with certain valuation, and the syndicate is offered to participate in investing in some startup based on some proposed valuation. But of course, there is always on behalf of the syndicate, there is always. Am I connected still?
Yeah,
Yeah.
Okay. As there is always negotiation process. I just wanted to say, maybe as a final word, now it's good time to invest, guys, as a business angel. In 2020, when the market was hot, it was very difficult to get even into bad deals. Now even top deals are available to angels, to Angel Club. So if you're thinking about it, the timing is now. And yeah, go ahead. It's not scary, and you will love the growth.
Thanks very much, Dennis, for those final words. And everybody on the panel, we're going to wrap things up. Thank you so much for giving your time in preparation for today, and also the time on the panel. We could have kept chatting for a lot longer. We've gone 10 minutes over, or a lot of time. So huge thank you, and hopefully we'll see you on the workshops in Seeds of Bravery. Thank you very much. I'm going to hand you over. Oh, sorry. No, I'm not going to hand over. I'm going to continue on myself. We've covered a couple of the questions. I know we have more questions within in the chat here to go to. But I'm going to introduce someone that I've been working very closely with over the last number of years in an angel syndicate here in Ireland. It's called the Bull Investment Syndicate. So this is Seamus Ivers. Seamus Ivers is a serial entrepreneur himself. He is the chair of the Bull Investment Syndicate that has been going for over 12 years at this stage. And I think Seamus is up to, north of 50 or 60 investments at this point, and a number of exits. So we've asked Seamus to come on and just give just have a chat about his own background and his approach and strategies as a seasoned angel investor. So Seamus, welcome. How are you?
Good. Can you hear me there? Okay.
You're coming across loud and clear. Thanks very much. So look, I'm just going to hand the floor over to you, and you can walk through these points here. And look, huge thanks again for jumping on and helping out.
Well, after listening to the last 40 minutes there, maybe a lot of this has been covered, but sure, this is my view of the world. And as everyone knows, angel investing is all about your individual experience and how things went. So my background is been involved in software services since I was 23. Built my own companies and sold them. Last one I sold it, bought it back again and sold it again to EY there a few years ago, 2 years ago. And during one of those periods, I was in the American corporates, doing stuff in Europe, had an office out in Serbia, and a lot of trip, but kind of got a bit bored from the fact of not running my own show, and the American corporates can be kind of quite constraining and different in approach than an entrepreneur. So angel investing came along about 10 years ago, and I got involved in that. And that was it was actually, I used to joke, it was keeping my entrepreneurial candle alive, and keep on going. So in terms of what I'm going to go here is just my own thoughts on this, and they are my personal views of things. I wouldn't put myself as being a professional investor, more kind of an entrepreneurial investor, which means you do the same thing as entrepreneurs do. You jump too quickly, you do mistakes, you make mistakes, etc., etc. But I think one of the first things when I'm speaking to someone who's joining our group, the first thing I'm interested in is what's their focus. Are they hands-on or hands-off? Because with a syndicate, hands-on is not what we really want. You want an angel who's interested in helping the company, but you're not looking for someone who wants to earn a living. So in other words, if they're looking for director's fees, if they're an accountancy person who wants to get accountancy new clients, you're not interested in those people as angel investors. They have a conflict of interest, and you should really avoid those in your group. It's totally different. So my approach is, and the syndicate approach in general, is a hands-off approach. You invest, you help if you are asked to help, you tell them what you're good at, and they can approach people who invested and ask for advice, but it's not a sit looking at your show over your shoulder. Because if you want to do 50 or 60 investments and do a portfolio over time, you can't afford that time. It's not possible to do it. So in terms of your approach, or it's critical there, and I think Taras mentioned it, is I'm a believer in a syndicate, and there are, you can invest as an individual, but it's high risk because it's very easy for an individual to get excited by a founder. You get engaged, it becomes personal, etc. And the syndicate is quite important in my view, because it makes it safer as an investor. You have lots of different experience in the syndicate, and you can core things to listen to those people. And if you're the only person in the room that's really likes this company, you should ask yourself why. Do you see something special, or is it you're missing something, which is the more likely outcome? And so that's why I'm a syndicate member and why I believe in the syndicate. And also, Taras mentioned you need bigger money when you're investing in certain types of companies, and even startups these days, you're looking for reasonable money. So being in a syndicate means you can build a portfolio with the same amount of money as if you invested individually. You can have a smaller amount invested in each company and more companies, so you get a better spread of a portfolio if you're going through a syndicate, while your investment is still large enough that you have input to the company that you're dealing with, and you're seen as a serious investor because it's a syndicate size of money. And my personal views on angel is, and I would always say this to people starting, is, look, how much money are you going to be putting in? Take that amount and divide it by 25, and that is your investment amount per company. And the reason I choose 25 is quite simple. You need to at least get to 10, ideally 15 companies, and you'll always need money for a second round. So you need 10 lumps of money for that. So if you're starting with €250,000, then your investment amount is 10,000 per company. Okay, and you might never use all your $250,000 because hopefully some of the exits will happen and start giving you more money, but at least you have some mechanism for deciding. And then it's really important that companies fail early. So the ones who are going to fail quickly, quite often in the first year or two. And if you're only on your second or third investment at that stage, because you're just new to this, quite often angels get disillusioned and they decide this isn't working. I'm after having two who failed. but it's really important. And Taras mentioned this, is, you know, you have to have to stick with it and not go too early. And the other thing that's important in this kind of thing of using the standard amount of money per investment is, if you invest, let's say you're investing at 10,000 level, okay, and then something comes along and it excites you, and you go, I'm going to go 100,000 in this one, okay. Well, that must be the company that gives you a 10x return, because if that fails, you're 10x down, and you're not building a portfolio where standard statistics kind of will apply, okay. And don't become disillusioned by the early fail. You must go for at least 10 or 15. Don't stop early on just because you've had one failure or two. And that failure will be worse if you have got excited and invested 10 times your normal money, or 5 times, whatever. So the worst thing, and then from a company perspective, you know, angels hate, I need money now or we're gone. You know, so if you invest in companies, it's really important to keep a connection with them, and the company too. And we were very upfront in telling companies this, that the worst thing you can do is come along and tell us that you're out of money and you haven't given us plenty of notice on that. Okay. So in terms of my investment history and how I got involved, and I told you the start, you know, the corporate world and why I got started. But I got involved around 10 years ago, although, you know, the first year, it was like doing a lot of listening. And I often joke that if God had come in and we believed there were God, we still wouldn't have invested, because you're nervous about it and everybody in the room is kind of getting used to each other. So we did a couple, but it was very few. And then it starts to accelerate as you get a bit more confidence. So I have about 60 at the moment, all told. And one of the things that happens is, well, hopefully happens, is that over time, you'll get 1 or 2 returns. And if you get a return, that gives massive confidence. So you might have started off saying you were going to invest $500,000. But if you get a 10x return in the first 2 or 3 years, then you've got another 9 lumps of money to invest. And what you can do is, you might start at 10,000, and by the time you're in year 5, you've slowly moved it up to 15, 20, or whatever. But don't do 10, then I'm at 50, and then I'm at 100, because now you're out of sync on that portfolio amount. Just take it easy and steady. Okay. So in terms of my own exit, just to give some portfolio view, I've had a baker's dozen plus 1. So baker's dozen for is 13, it's 12 plus 1, and I've had that plus 1, 14 exits. I am ignoring one very early, and we're all entitled to ignore some mistakes, but one about 20 years ago, where it was a guy who was in college with, a movie, which is not really an angel investment. Don't ask me, long story how I got involved in that one, but it was small money. And then a friend who I gave 7.5K to. So ignoring those 3. And I've had 4 liquidations in those 14 exits. A liquidation is an exit. It's an unfortunate exit, not a nice one, but still an exit. I've had 2 part losses, in other words, ones where it might got a 60% return, not 100% or over. And I had 1 absolute break even. And in fact, the good relationship with the company, the founder actually increased the amount of money given to the angels to respect the help he had got. And even though we're at about 90%, he made up the last 10% himself. And some of those 14 are still on exit payments. In other words, you might have a 3-year earnout, and so 1 or 2 that are still kind of paying out for the next year or 2. And so in terms then of the return on those, so I started off doing 20 per investment and moved up slowly over time. I was lucky I got one early one that kind of gave a lot of confidence, relatively early, everything is relative. And so I moved up the scale of investing over time, both in terms of quantity and in terms of the value on each investment. But overall, in those 14 exits, I've got a 3.3x return on the 14 that I've exited. So in other words, including the losses, I still got a 3.3x return. And to put that in perspective, it's more or less covered all of my existing investments. So what I've got back, if I lost everything that was still there, in theory, I wouldn't be too far behind. But obviously, you'd be very unhappy if the remaining ones didn't work out. And I have some good ones in play. And one of the things is the good ones sometimes can take longer to exit. It's just the nature of the game. And you also tend to have a lot more involved in them because, you know, if you have one that's going well, you will tend to invest in subsequent rounds. So you might start off, say, with 20,000, but 3 years later, 4 years later, you might have 100,000 in that company. Okay. And so with some of the exits, I would have had gone in maybe the smaller amount, but I would have when it finally exited, I would have been at a lot higher than I initially went in because of those subsequent rounds. And obviously, some of the exits were that were failing quickly, you exited with just the standard amount you were putting in. So it's a matter of control, and deciding not to follow sometimes is an important decision. You know, you don't have to follow every single bit of your money. And then the last one there is just times what you need to be careful of. You know, early on the fails I've mentioned, don't get disillusioned. Don't kind of say this is not for me and guarantee your loss, because if you're in 5 of them, one of them goes wrong and you go, I'm not going to do any more of this. Well, then you're pretty sure that you know, your chances of winning on the other 4 are probably slim. You haven't done enough of a portfolio. There's also danger. You know, sometimes when you've had exits, you get careless. You kind of say, oh, I'd never look at these kind of companies, but you know, AI. I haven't invested much in AI really. It's not. Everyone calls themselves AI, but it's not the AI piece I'm interested in. But sometimes after an exit, you go, well, I'll try one of these, and in your heart, you know, it's probably not that kind of thing you really like or want, but you go with it. And invariably, I found they don't work. And the other thing is that that's a danger point. The danger after you get fresh cash, sometimes you get too careless. Okay. And lastly, the tail. So when you're getting into angel investing, I think Tara said that he's one's there for 10 years. You know, that is the case. You will have long-term companies, and there's a lot of management in that. When you have a large number in your portfolio, just keeping track of them, you know, the due diligence of getting what shares you have, what's the cap table, you know, getting a copy of the share cert, a copy of the investment documentation. You're rushing doing things, or maybe doing 2 or 3 deals at the same time, and you forget about it. And then a year later, you come looking for it. And it's a lot harder when you come looking for it in a year or 2 after you invested. So that's good documentation, good management of your portfolio. You have to do that. You can't be totally careless on that. So that's my summary. If anyone has any questions, feel free. I know we're a bit tight on time. So Larry, back to you.
Hi, Seamus. Thank you so much for that. Can you see me? Can you hear me?
Yes, I can.
Perfect. No, that was great. The strategy that we needed actually for new angels to be able to know how to get started on their investment strategy. So I really appreciate that. Now we are a little bit tight on time, but we will carry on right now. But I appreciate your presentation. Thank you for being here.
No problem. Thank you. I'll turn off the video.
Okay, thanks.
Yeah.
There you go. Thanks. Yeah.
Okay.
All right. So let's continue there. I'd like to actually now introduce our next guest and our final guest, in fact. And those were really great tips and very valuable tips there that Seamus shared. Thank you for those approach and the strategy that you shared with us today. So our next and final guest today will be Jacopo Losso. He's the Director General of EBAN, the European Business Angel Network. And his strategic leadership at EBAN involves tracking key issues within the investing ecosystem and influencing EU decision-making process to benefit startups and investors alike. So welcome, Jacopo, if you'd like to come in now.
Hello, everyone. Thank you for having me. Hope you can hear me and see me well.
Let's see. Yes, we can hear and see you.
Fantastic. Excellent. Well, I'm gonna then share my screen if you can give me the function to do so. And I have a couple of things to show everyone today regarding the business angel market and how it evolved over the years.
So do you have the screen already, Jacopo?
Yes, now it works. So let me just pop this into the full screen mode. I hope you can see it properly on your side. Yeah, I think so. I will then begin. So hi, everyone. Thanks so much for inviting me. My name is Jacopo Losso. I'm the Director General of EBAN, the European Business Angel Network. Today, I'm going to be talking to you about these two topics. First of all, how the business angel market has evolved and grown over the years on the European continent, and a couple of the insights of what we're seeing taking place in the angel community in this time we're living in. Before we do that, let me just show you a photo which was taken from a newspaper in Belgium in 2003, which is mapping the business angel networks across Europe with a snapshot of how the community looked in 1999 and in 2002. So you can see that actually 25 years ago, angel investment was somewhat relevant and popular in the UK, but it was very much absent around the rest of Europe. So out of the 64 networks that were documented to be existing across the European Union, actually 49 of them were located in the UK. Whereas a couple of years later, you can already see how the population of business angel networks across Europe actually began to grow and grow actually quite quickly. Back in the day, the UK had and still has nowadays a very important investment incentive, which is called the EIS and SEIS, Enterprise Investment Scheme, which allows basically business angels to have a little bit of a risk protection in case their investments don't go so well, and a little bit more of a reward when they do exit those investments. And we believe that this explains a lot of why across the European continent, actually only in the UK, there was a lot of many more clubs than on the continent. EBAN has been running statistics on the market since a while, and we've been tracking really the growth of not just the business angel network population, which you can see on this slide here. Nowadays, we count roughly 360 clubs active around Europe, but we've also been tracking the investment activity across different countries. EBAN produces a study called the Statistics Compendium, which measures across 37 different countries across Europe every year the investment activity that is happening throughout the visible market, what is so-called the market that you can measure, meaning investment activity that is happening in clubs and in syndicates and in networks that are also sharing and reporting that activity with us. So we see this as a part of the market. And of course, there's also a lot of activity we don't see, which we know is taking place outside of structures and of business angel clubs. This is how the population of angel investors progressed across Europe over the past dozen or so years. We were seeing on the first slide that roughly 10,000 business angels existed in 1999, mostly located in the UK. And nowadays, the population is much closer to 45,000 business angels linked and members of clubs, associations, and business angel networks scattered across Europe. So that's actually a pretty steady growth, as you can see from this graph. And again, we're just counting individual investors that are affiliated to a business angel association or network, and not individual people that are not linked to any club. On the next slide here, we'll show you a little bit the progression of the funding rounds. So typically angels, on average, across 37 different geographies in Europe, are investing in deals roughly around 210,000 euros, being the typical round invested in a startup done by angel investors. That hasn't dramatically changed actually over the years. We have had, of course, some ups and downs, as can be seen, especially the COVID years, let's call them that way, have been really an outlier when it comes to the typical round size. We believe that's also very much due to valuations in that period also skyrocketing, and in general, just more hype and more competition to invest in pre-seed and seed stages when angels are also usually investing. And you can see here a little bit the breakdown of the different rounds that are done around Europe, where angels are investors in. As you can imagine, more than half of the rounds, roughly 60% of the rounds, are below €500,000, and the remainder is actually split between rounds that are a little bit bigger. So 18% of them being between €500,000 and €1 million, and actually 15% being rounds above €1 million. Again, these are the rounds the angels are participating in, not so much the actual tickets that they put in or the commitment of the syndicate in that specific round. What this graph tells us is that angels are investing also in the follow-on rounds of the startups that they've backed in the, let's say, the first funding round. So this is kind of coming back to the point that our previous speaker made earlier, to make sure you're setting aside enough in your angel portfolio, in your investment thesis, that you're setting aside enough funds also to continue supporting your startups as they grow. And be they bridge rounds or be they late seed or pre-series A or series A kind of rounds, those are those, let's call them bigger funding rounds of $500,000 and above, that you should also be joining as an angel to maintain your position in the company and not get too diluted way too early on in the story, in the development of the startup. These are our newest investment figures. These are on the 2023 angel investment ecosystem. They're still to be published officially. We're going to report these actually in roughly a month from now, but these are the numbers that we're sharing just for your eyes today. The year 2023, I think, across almost all countries of Europe, was a very challenging year when it came to investment activity. The market dropped roughly 13% when compared to the investment activity of the previous year. There's a roughly 1.25 billion euros invested in 2023 by business angels in roughly 4,700 rounds they've participated in. As you can see, there's an important drop in both those figures when compared to the previous year. This is going a lot hand in hand with the general slowdown that the venture capital industry had in 2023, with many Series A, B, and later stage VCs pulling back and not funding companies in the midst of a unstable, let's say, ecosystem, and an unstable kind of geopolitical also environment that we are currently, of course, still living in, but that at least in 2023 was much more pronounced in terms of the pullback of those later stage investors. And of course, as angels are also part of the investment community, and their startups are fundraising eventually also from those later stage VCs and private equity groups and family offices. You know, whenever there is a slowdown happening in the later stage, it also does have an effect on the new investments, especially that angels decide to not make, and on more prioritization of investments in their current portfolio companies that now are going to be needing anyways resources to continue on their growth journey, but they're not going to be raising those VC rounds any longer, or at least not in this, or at least not anytime soon. So that actually translated last year in seeing a lot more funding going to current portfolio companies, a lot more bridge rounds, and a lot of less new investments made into new portfolio startups. So that's just to comment a little bit here. The two main figures of our graph. On the right-hand side, you can see a little bit the average investment activity, the average ticket that angel syndicates or angel investors usually commit to a company. So 211,000. We have below that also the average ticket each individual angel puts into a deal, roughly 26,500 as an average across Europe. And then last but not least, the average angel network in Europe, meaning the club that brings together investors, last year had roughly 3 million euros of investment activity on average around Europe. And these are all numbers that are way down compared to the year before, 2022. In terms of composition of actually the entire early stage market, angels still make up more than about 50% of the funding available to startups in pre-seed and seed stages. So with the remainder being invested by VCs, seed stage VCs, and finally through crowdfunding portals and platforms. So it's a 2.5 billion euro market in Europe, half of which is represented by angels. And that is also why we always say that angels are the first funding source available to entrepreneurs in their very early stages of development. And finally, the top 3 industries in Europe when it came to investments amount. Last year, health was actually first. 18% of deals done by angels have to do with the health industry, broadly intended. So we're talking about digital health, we're talking about hardware and medical devices, you know, every solution that is in the realm of the health industry is actually gaining more and more attention from angels. And this is, I believe, actually the 3rd year where health ranks among the top performing sectors. Enterprise software and SaaS solutions are usually very popular. On average, they represented about 16% of the deals done by angels last year. And fintech with 12%, this actually is a drop for the fintech industry, which I believe has now reached a certain level of maturity in the market. And as angels, we always invest in the technologies that will, you know, change the world in 5 to 10 years from now. So let's say less interest from the community in fintech, nevertheless, still a main important sector. And just a couple of quick slides to show you the evolution of the market. As you can see, the years 2020, 21 were definitely exceptional years when it came to funding. The market nearly doubled from, you know, pre-COVID to the pandemic. It is definitely now coming down, and I think we will continue to see definitely an outlier like 2020 and 2021. Probably not anytime soon. And on the next slide here, you can see a little bit the main trends that we've observed. So just to kind of comment on these, it's becoming easier and more, let's say, also reliable to measure the angel market. More networks are reporting their investment activity, but there are also more platforms that are tracking investment activity and then summarizing the deals being recorded and making that information available. So we're definitely seeing more of the market, and as we see more of it, we're also measuring more activity. There is an emergence of the super angel role in the community. These are angel investors that have sizable portfolios and also received a lot of and also do rounds that are typically much bigger than us normal angels, let's put it this way. However, for those that are angels with typically smaller tickets, we're starting to see syndicates become larger in size, so more angels being pulled together with more capacity also to invest. So that's definitely a trend that we're continuing to see over the years, and also motivates why we're seeing deals with angels involved becoming bigger and bigger in terms of the round size. We're starting to see angel networks structure themselves a lot more than they definitely used to be in the previous times, with many groups starting fund or sidecar fund programs to basically help their communities invest together in groups and then streamline the whole investment processes and decision making, so to be also agile and professional as well when it comes to their interfacing with the startups that are looking for funding. Funding platforms are also becoming more and more popular among the angel community. We're seeing many groups use crowdfunding infrastructure to basically do deals and syndicate investments with others. There are obvious cost benefits also to setting up structures through platforms, and we're starting to see angels really begin to leverage those online facilities to close deals. And last but not least, women in angel networks is still something that the community is struggling with, although we are beginning to see a little bit kind of improvement in business angel networks, especially some that have initiated programs to onboard more female investors in the club, as well as create kind of structured educational offerings that are more intended for women angels or prospect investors. A couple of things we believe are a part of today's world, and they will definitely continue to be also in the future. More secondaries and exits via secondary sale of shares. There has been really a strong growth in the community among actors that are specialized in doing secondary transactions, buying out angels or other early stage investor shares, usually at a discount. That industry is expected to keep growing, and we're starting to see more VCs specialized in the space, as well as the emergence of online platforms to do trading of secondary in the form of secondary sales with investors selling their shares on those platforms. Angel networks, as I've commented earlier, are becoming more and more similar to the VCs, with fund programs, syndication, structured programs, and similar. We definitely welcome this, as it will give the angels more of a competitive edge as well when it comes to making deals happen in early stages. There is increased competition from actors, VCs, that are becoming more and more interested in investing very early on in startups and maintain also a position in those companies, so that their later stage funds also can follow on and invest in. This means that as a community, we need to really now take that into account, that the startups that used to only be coming to us for the funding now have also more actors available to fundraise from. As some of you have noticed, there has been a boom also in defense technology investments, dual use especially, but also in green transition and climate technologies. This is very much also a result of the times we live in, and secondly also driven really by all of the government spending and all of the governmental programs that exist in this particular space. And speaking of government, we believe there's going to be actually more support to the angel investment community in the form of either tax credits and or matching investment programs, given the huge need for Europe to quickly modernize on a lot of areas, on the digital transition, on climate transition, and last but not least, also on national security and defense related topics. And is already indicated in some of the early papers that we're seeing come out of the European Commission. We believe governments, in the coming years will be putting in place at a national level more tax schemes to encourage risk-taking, and at a new EU level also more matching investment programs that can really be of support to investing in many deep tech areas that are, typically very tough for private investors to get involved in. You can find a lot of our research work on our website, www.eban.org, in the so-called Knowledge Center, where besides our statistics report, you can also find a lot of interesting other reports, as well as materials, toolkits, guidebooks intended for business angel investors, and a lot more. So thank you all for your attention. I hope you enjoyed this presentation. I'm available for any questions if there are any, and happy to share, of course, a version of this deck with everyone.
Thank you, Jacopo. No, that's great. Thanks for the overview of the EU angel ecosystem, bringing up the trends that you're seeing and the sectors that are coming up for investment. Thanks for your presentation. Really appreciate it. Yes, we will share the slides with everybody that participated today. So yeah, thank you for all that research.
My pleasure.
I'm going to start sharing now as well. And if you can, log out. That way I can share my screen. Thank you. All right, well, we have now arrived at the end of today's workshop. And we do hope that everyone has been able to enjoy today's content and all the different speakers. I'm just going to turn on my camera now. Just give me a second. Okay. All right. It's just a few technical issues. Okay, but anyway, that's fine. Thank you. Thank you, Barry. Hope everyone can see this all right. All right, so I want to wrap up with you guys today and just be able to recap a little bit of what we were able to cover on this workshop. And I hope as well that this was helpful for all of you, in particular in understanding the responsibilities, the risks, and the rewards of being an angel investor, and also with broadening your knowledge of the European and Ukrainian angel network and syndicates. I'll just go through a brief recap of some of the themes that we've covered today. We know that angel investing can begin at as early as the initial seed money invested in startups in exchange for the ownership equity, and it's usually invested at the very early stages of a startup journey. We shared a map with you as well to help you to understand what is an early stage. We also covered that investing through a syndicate allows to share on the risks and rewards, and that investment through a portfolio is a strategy to mitigate the risks through diversification. We covered some of the responsibilities of an angel investor and how they can contribute to startups beyond capital. And a lot of our panelists today and speakers made that point as well, and how important that is. We gave an introduction to the Ukrainian and the European angel networks and syndicates, their many activities, the invested sectors, and the angel investment growth in these regions. And thanks for Jacopo for that covering as well. We shared some resources through the glossary and the startup roadmap for better understanding of the angels funding landscape, the startup progression stages, and terms that are used in the investment world. And you should have received that by now on your email. Do use it as a resource. A lot of thought went into it, and I think it's going to be supporting you if you become an angel investor beyond these workshops. You also heard some tips and hacks and wise words from experienced angels and founders turned angels. And last but not least, you experienced a pitch scenario today by an innovative and high-performance founder. So in conclusion, I hope that these sessions has helped you with the understanding of responsibilities and the risks that you would be taking as an angel investor. I want to point you to what's coming up next as well. In the upcoming workshops in October, we will give you a more detailed insight on investing through angel syndicates and their advantages and how they run. And after that, in November, we will dive into how to conduct a deal flow from first investment to exit. Some of the guests that we had here today will also be coming in the workshop 1 and workshop 2, and you're going to be meeting quite a few new panelists and new angel investors as well in the next 2 workshops. And as a nice little reminder for you, we did speak about how we're going to have the demo days, and the very first demo day that Seeds of Bravery is going to be launching will actually be organized by my team here in Access BIC. This is set up for this coming Monday on September 23rd from 2 p.m., 4 p.m. CET. So the registrations are going to be as well shared with you on the chat box. So do register for it. And if you'd like to hear about some very interesting, innovative founders from Ukraine who will be pitching at that day. So thank you to all the speakers and the attendees for your participation today. We really appreciate you taking the time. And for our attendees, I hope this was a helpful workshop for you. And I hope to see you on towards October and the end of November as well again. Any more information you want to hear about Seeds of Bravery, I'm going to put a slide on for you now so you can pick up the website and the different connections that you can reach them on. Thank you again, and I hope to see you soon.